All right. Happy Friday to all. It's going to be a good one today. I'm actually pretty excited about it. Not a good one for Oak. Evidently, Oak's got problems. Oak made some bad comments, really bad stuff, evidently. Right, Oak? Is that what happened? Why'd you get banned from X? Anyway, all right. So we got lots to cover. Again, I think a Bitcoin breakout is imminent. I know I've been saying this, but we are pressing hard. I haven't seen strength in Bitcoin like this in a very long time. And I think it's just a matter of time before we break higher, probably this weekend, by Monday at the latest. And I'm saying that with like 97% conviction, which is a lot for me. Also, we have concerns from Fundstrat. Well, actually, before I jump into that, let's look at pre-market. You could see how big tech, Apple, Nvidia, AVGo, a lot of the chip sector still doing really good today. Netflix had great earnings. Bunch of Chinese crap popping. We'll talk about that, and you know what my opinion is going to look like. We got FUD about Tesla, along with new 30-day free trials. I think with that version 13 coming out, you know they're going to be pushing a lot of free trials because people are going to get hooked. But lots going on there. But let's move on here. So we do have some concerns from Fundstrat. They said, or I should say, Fundstrat's Mark Newton calling for a 5 to 7% pullback in the market through mid-November. Could this happen? I don't know. Let's take a look. Let's see what his narratives are here. Let's see. Does he actually? Oh, no, I got to read it. I can't get my bot to read an image. Oh, no Snoop Dogg today. All right. Negative momentum divergence, RSI and MACD have not followed SPX to new high territory. Intermarket divergence, NASDAQ, along with Russell 2000 and Department of Transportation, have lagged the S&P and the Dow Jones Industrial Average in their moves to new all-time highs. Elliott wave pattern looks near. You know what? I'm already bored. Yeah, anyway, he's right. There's technicals that are probably pushing us down. And could we see something like that, a retrace, especially after the election, especially if we pump into it now that people are realizing that real Donald Trump is probably going to win? I think we could. I think he's probably right. We could see something like that. That's very possible. Let me see what else we have here while we're in this section. You know what? We'll hold off for now. I've got other stuff I want to talk about. Real quickly here. Let me just look. So I want to talk about a few other posts. Let me see if I can get up here. There's so much to cover. So much to cover. Let me just do this. I'm going to refresh. I'm going to go back in. So oil. Oil has finally broken under $70, which I'm very excited about. If we look right here, we can see that, like I've been calling for, this wick is very strong. It is the strongest. If we close this monthly time frame anywhere where we are now, this will be the strongest impulse down since over here in, what was it, March of 2022, where oil kind of reached its peak and it was game over, and I called that top too. And so, and again, all we've had is lower lows. We haven't cracked through on this. It's a descending triangle. Yes, that's what I think I got that right. It's been so long since I've said that. Anyway, so what we're talking, the measured move on that is actually pretty deep. It's down into the 40s and down into the 40s range, maybe $30 a barrel. Now that could come with a Trump presidency. He does want to lower energy prices by 50%. So I think that's very possible. But again, I think pressure, we're not seeing a major flare up in the Middle East. And also we're seeing really high odds getting better by the day across everything. Betting markets, real clear polling has a blowout for Donald Trump against Kamala Harris. And that has, there's a lot of biased pollsters to the left. So the fact that it can show that is pretty phenomenal. But again, so I think that's creating a lot of downward pressure. I wouldn't be surprised to see us go further into the lower 60s. This is good for markets. On top of that, we have the dollar rejecting right where I said it was going to. So just like oil dropping like I said it was going to, we're seeing the dollar. And again, this was such a strong impulse up, guys, in the dollar. And yet the markets have been really, really strong, I think, which is very telling about kind of what's happening. But yeah, so the dollar, I would expect this. I expect some strong weakening in the weeks, months, quarters ahead. I do expect, again, you've got lower highs here as well. And I expect this to be yet another one to reject off this trend line that was previously support. So I do think that's happening as well. We have a lot of talk. We'll go back to U.S. economics data in a little bit. We have a lot. We have a lot of economic data to touch ourselves. Or I should just say that the topic of U.S. economy we'll come back to in a second. But before I go there, I do want to talk. It seems like everybody's trying to pump China again. There's a number of things that happened in the Chinese markets overnight. I told you I thought stimulus was coming. I told you I thought stimulus would be coming on a Friday because of shitty data coming out of China. Did I not say that yesterday? And what happened today? So now today I put Bloomberg still needs you to buy their friends' China bags. So make sure you get excited about this article. It says Hong Kong pledged to bet and debut companies in about 100 days in a bid to guarantee a set time frame for the IPO applicants. So they're trying to get the IPO markets again. But what should we really be focusing on? Well, I don't know. Maybe it's this Kobayashi letter comment. Maybe it's this. Maybe this is the signal. Let's listen to this, and then let's look at it. This is from IIF and Wells Fargo Economics.
China is in a debt bubble. China's debt to GDP ratio hit a jaw-dropping 366% in first quarter 2024, a new all-time high. Since the 2008 financial crisis, the ratio has doubled. To put this differently, for 1 unit of GDP, the Chinese economy has produced 3.66 units of debt burden. Non-financial corporates have the highest ratio at 171%, followed by the government sector at 86%. Households and financial entities' debt to GDP is 64% and 45% respectively. Stimulus won't solve China's debt crisis.
So again, if you're borderline retarded or just like losing money or like that, like living on the edge, like, oh, I could make some money, but I might lose it all. If you love that kind of stuff, I encourage you to invest in China because this thing will be 400% debt to GDP before you know it. And then it's literally going to collapse. So if you like investing in markets where you can actually own the underlying assets, and instead just have paper that says, hey, I like this company, in a country that's incredibly debt burdened, in a communist regime that enslaves millions of people, and that, including their own, and did that for 3 years and then destroyed their economy and want to invade their neighbors and want to be a threat to the West and overcome them. Like, these are all big selling points to me. So I say, go all in, put all your money in here, guys. If you really want to do that, have fun. And I hope people realize that is sarcasm. Some people won't. Some people are pretty fucking, well, whatever. I digress. I'm trying to cuss less. It's easier for the filter. I'm trying to run this Descript thing, but because my videos are so long, if I cuss 500 times in them, it becomes really hard to edit. So we're trying to make it better. Anyway, free Tibet put, obviously these guys do not like China. It is free Tibet. I'm going to follow those guys because Tibet does deserve to be free. It says Chinese growth comes in cooler as investors pin hopes on stimulus, Wall Street Journal. That's true. And the growth is cooler. And their GDP is still a complete fabrication. But who cares, right? Who cares about reality? Just buy. Just buy China. Let's listen to this article.
Chinese stocks climbed on Friday after the central bank kicked off 2 funding schemes and urged swift adoption of financial policies to support capital markets, while mixed economic data kept up pressure on policymakers for more stimulus.
Yeah, so again, guys, chase the money, and that way you can lose it all. That's highly suggested. And I don't know why I like Banana 3 stocks, but I'm sorry, I wouldn't be pushing Neo. I wouldn't be pushing Baba and Mobileye. I mean, who gives a flying F about Mobileye when you have Tesla? So I disagree with all of this. It's all trash. And quoting Bloomberg, there are very rare times where you should refer to Bloomberg. It's usually when they have data in a chart. But their narratives and the thesis behind most of their articles are complete trash. I actually think this is probably the demise of Meet Kevin too. I know he really seemed to focus on Bloomberg type articles, and again, it doesn't serve him at all. And then right after China here, we're gonna switch back over because we got tons of economic data to talk about. So we're gonna bounce over to that right after this point, and then we have the Tesla stuff to talk about. We got the Fear and Greed Index. We got rates. Lots of stuff. But this says Trump trades gain traction while China's economic slowdown weighs on global markets. Here's a real article from a company that doesn't suck, I guess. I'm going to have to look into their interface and see what they have here. But this is the truth. their markets are rallying because of Trump in the United States, and then they're failing in China because they're a miserable country run by a dictatorship. Sad story. All right, real quick, CNN Fear and Greed Index. Let's just refresh here. We were at 71 last night in the market recap. Still there this morning. Makes sense. 71 on Fear and Greed for crypto. Oh, up to 73. And we'll actually look at this. We'll look at the bonds in a second because we want to look at economic data. And before we even jump into that, I think I see CNBC right now talking about economic data. So let me just do this. I'm going to refresh and go live on that. And we'll just see what they have to say. Let me go back a little bit. We got some Steve Leisman up in here. Let's see what he has to say. He looks a little tired, but we'll give it to him. So again, Netflix, great earnings last night. Let's see what we have here.
Its ad tier jumped 35% sequentially.
And after yet another upside surprise on the economy in the form of better than expected September retail sales, economists are debating now whether the Fed should pause and not cut initially. Senior economics reporter Steve Leisman joins us now, but it was 90%, I think you said, for a quarter point. Has that moved at all, Steve?
No, surprisingly not, Joe. And maybe I can explain why. But look, this buoyant U.S. economy we've had, record-hitting stock market, they do have some economists calling for a rate cut pause, while others say the economy could be doing well because rate cuts are expected. Let me go through this now. A chart from Joe Livornia, chief economist at SMBC Nikko Securities, shows that inflation-adjusted Fed...
Real quick, sorry to interrupt, Steve. Rob Group said, thoughts on getting back into MicroStrategy or MSTX? If I was getting into it, I would probably do MSTU. I don't know who made it yesterday, the point, George, or I don't remember who it was. But they said, hey, look at the volumes on MSTU now. That's the 2X fund versus the 1.75X, which is the MSTX. MSTU, the 2X fund, has a lower expense ratio, so it's cheaper for the maintenance costs with it. And their volume has caught up. It was about 3 million, I think, that was traded yesterday. The same as MSTX. So I actually have kind of changed my thought process on that. I would probably get interested in MSTU. And also, again, I did post yesterday. I think I passed it on in the Discord too. But I do believe MicroStrategy right now is a good buy. And I'll just look real quickly here. Because of what Bitcoin's doing right now, I think it's cheap. It is up 2% already today, but I actually think we're bouncing off this fib. And if I had more capital I wanted to deploy, I'd probably be going MSTU, Rob, just so you know. All right, let's get back, Steve.
The Fed funds rate is near a 17-year high, but financial conditions overall are easing. The gap between the two is at a record. That is, the Fed is tight, but financial conditions are loose, so maybe they don't need to cut. Livornia said in a piece yesterday, and I quote, the upshot is that the Fed should skip action at the November 7th FOMC meeting until there's clear evidence of renewed labor market weakness, which we expect in the months ahead. Policymakers should go on hiatus. But not so fast, say other economists.
Yeah, so let's real quickly interject and just look at the bond market and see what it's done since, okay? So we actually have seen an uptick on a 25 bip cut for November. So now we're up to 90%. That's pretty high. And then in December, we're still at 73.7%. And then in January, we're at 52%. So if we're going to see a cut, I don't see it happening until at least a pause. Honestly, I don't see it happening till March. I think March is the pause. That's where we have a 48% chance of cutting another 25 bips. But I see at least another 75 bips, guys. That gets us 125 down on rates. That gets us probably into the low fives on mortgages, maybe upper fours if we're lucky by late spring. So I personally see at least this happening. Again, I think the Fed has tightened too much. There are a lot of great things that can happen in the economy, especially if Trump wins the election. But I don't know. I see us continuing to cut rates.
The economy may be strong because financial conditions are loose. It could be that financial conditions are loose because the economy is strong. I talked to Mike.
Trophy husband shirt. I love that. I'm going to talk to her about it. See what we can do. Oh, and I might I'm sending admin wife on a journey. She's going to see about creating merch and how we can integrate a merch store, even though I'm a smaller channel on YouTube, to see if we can get some merchandise out there. So some micro to macro stuff with some of my favorite sayings. Hopefully, most of them are appropriate. But yeah, we're gonna check into that and see what we can do for it. So I thought that would be fun.
Mike Ferroli yesterday from JP Morgan, he says many of the financial conditions we talk about are a reflection of how well the economy is doing. To wit, the biggest single factor easing financial conditions in the Fed's index is the stock market itself, followed by lower mortgage rates and high housing prices. And the economy might be doing well in part because the Fed pivoted a year ago and eased financial conditions. Those economic gains could reverse if the Fed doesn't cut. Paul McCulley, ex-economist of PIMCO, tells me the capital markets are already pricing to a very plausible and sensible terminal policy rate near 3.5%, thereby bringing forward the supportive effect of a neutral policy rate to large businesses. The still restricted policy rate continues to choke small business and the lower half of the household income.
I think the keynote on the last part was the current rate is choking small business, and we need to get off their necks.
Wealth distribution. So if that's the case, the Fed has to cut to provide relief to Main Street businesses and households where, unlike on Wall Street, they still have punishingly high interest rates. And Joe, just one more chart, if you would here. If you take a look, I charted here what the NFIB Small Business Group says is the average rate paid by small business. 10.1% in September. And there's the AAA yield on bonds right now, which is down near, I don't know what that is, 3%, 3.5%. The gap has never been wider. So on Wall Street, they already have the low rates. On Main Street, they don't, Joe.
I don't know where they're borrowing. We didn't even consider that, I don't think, Steve, because when you said punishingly high rates, I'm thinking let's not even talk about where inflation is. Just looking at back through the last 50 years, these just are not punishingly high interest rates. But when you look at that, who they buying? If you don't repay those loans, do your legs get broken? The 10%ers? Or I mean, who are we talking about?
You lose your house, Joe. You put up your car, whatever it is.
How do they get away with that, Steve? That seems
because
like
you borrow from the banks. The banks are linked to the new SOFR, right? Which is the new LIBOR, right? And so on the.
Sorry to interrupt again. Cam Prog says Tesla's holding very well. The stock doesn't want to fall. Do you think we can hold that until earnings? No, I think we're dropping. We'll talk about that more.
In business right now, SOFR plus 500 is kind of a normal kind of rate. Maybe it's SOFR 400. So take that. SOFR's 5, add 5, you're at 10%. Now look, Joe, it occurs to me, the difference between Main Street and Wall Street is not geography, it's access to capital. The guys on Wall Street, the big companies, your Procter & Gamble's, they go to the markets, they borrow cheap. Your small businesses, they crawl on their knees to their bankers and beg.
Yeah, Mr. Potter, I guess.
Mr.
Exactly.
Potter.
All right, exactly. All right.
Do any of you old fogies get the reference, Mr. Potter? Do you guys get that? The old people will get it. I know because I do.
That makes sense, I guess. Then rates are punishingly high. They just don't seem punishingly high, but thanks, Steve.
But what about for credit cards and private business loans? Yeah, those are the rates that are high.
That's what Steve's 100% right.
We should just cap them. Cap the credit card rates.
Oh no, don't go there.
We actually should do that. I know they're mocking it, but we should cap the rates. And people might lose access to credit cards, but I don't care. I think that's the right thing to do. You shouldn't let people get credit cards that can't afford them and then have 30 to 40% rates and then get over the limit fees and late fees and destroy their credit. You should allow easy access to secured credit cards and maybe start them off with like a small bonus where you're taking some kind of risk. But again, that's just me. All right, so let's keep going. So again, we've talked about bonds. Now we need to get into, let's look at the actual, trading economics site and go over the data and look and see what's been happening here recently. So I'm going to go over here real quickly, and I'm going to go to this week. Let's see, it's 7:20. Hey guys, give me 1 second. Give me 1 second, okay? I gotta snug my daughter 1 second here, okay?
Necessarily sure.
By the way, I don't know if you saw the story yesterday that was suggesting
because JD Vance likes
that they want to keep Lena Khan in the role now.
I don't know if Trump would want to keep her.
No, Trump wouldn't. But I'm
you
saying
mean,
that Harris might.
So look, Harris
JD
clearly
Vance.
to me, so I believe, and this is unfounded, but that in 2020, Biden cut a very quiet deal with the left and said, listen, I need you to
With
support-
Elizabeth Warren. Let's
I
be
need you to
straight about
support
what we're
me,
talking
and I
about
need you
here.
to not be a pain in the ass during the election.
Which is why we wound up at
and,
CPB.
Correct. And I'm going to keep the stuff that really matters, Treasury, State, Defense, DOJ, and I'm
You
going to
get
give
this
you
stuff.
everything else, CFPB,
All right, sorry, guys.
FTC.
I think FTC really matters if you're.
Sorry, I had to keep you busy for a second. I like to get a hug from my daughter before she goes to school. So, only going to have so many days where that happens. Woo, and then running. Woo, I don't run much. Woo. All right, let's get back over here. Sorry about that. All right. Let's look. So here's what we got last night. Start with balance of trade. We got some Indian data too. People aren't too excited about that, but I do like, let me see. Is this lower than forecast? Ooh, it is lower than forecast. That makes me happy. Consensus had China's balance of trade being 89.8 billion and forecast at 82. It came in at 81.71. I like that because it means that there is less of an imbalance with trade with China. So this probably means like less purchases from the United States. Maybe we're purchasing from other countries because we still have a large trade imbalance, but I like to see it waning away from them. Exports year over year. Whoa, brutal. Brutal. They expected forecast 7%, consensus 6%, actual 2.4. Brutal. China is in deflation. I think these numbers are going to go negative again. Oh, brutal. I don't know how anybody could be excited about China right now. All right, let's look here. So forecast for imports, 1%, consensus 0.9, actual 0.3. So if you're dependent upon China buying your stuff, you're also sucking right now. And this, look at this. It looks like it's breaking down from support. It just looks painful. And the import and export data, balance trade data, a lot of this is hard to fake. So it's safer. You can actually refer to it and see something real there. New Chinese yuan loans. Let's just take a look here. So there's something I want to show you. So you see this massive impulse, January. Massive impulse, January. Massive impulse, January. Can you see that all the loans get pushed in January? But there's a trend here. Look at the lows. Look at what's been happening since like 2021. We're going down. Now the peaks, they've been trying to issue a lot of debt issuance at the beginning of the year just to keep things going. But you can see a trend here. And I think we're going to see the same kind of pattern where we have a peak, but I think that peak might actually be lower than any other that we've seen or than what we've seen here recently, like maybe a triple top or something down here, because they're just running out of money in a major way. All right, let's keep going. M2 money supply year over year. Well, that's one thing we can count on. Global liquidity continuing to ramp. So forecast 6.3, consensus 6.4, actual 6.8. So I think we're going to see a ramping curve here where they're just printing money. It's coming. Outstanding loan growth year over year. Look at this too. All right, but again, this is cyclical. Oh my God, look at that number. Look at that number, guys. Snug Daddy? I like that. I'll get a shirt with that too. Hey, man, I love, my daughter's 10. She's going to be 11 soon. And I don't know, man. I just realized how quickly time goes. I think being retired only made that worse. So I'm trying to enjoy every minute, every opportunity that I have. Look at this though, guys. Look at loan growth in China and yuan. Just look at how it's just falling off a cliff since the pandemic. Not that it's been good. You could see where there were the massive stimulus. You could see how strong China was in the great financial crisis. They were so much more powerful than the United States. So much opportunity to become the next world power. And especially after Xi, they've just destroyed that. keep your friends. If you have friends that you care about and they're investing in China, just get them out. Get them out, guys. Total social financing. Isn't that fun? I mean, they're printing money. Doesn't really matter. So total social financing in China is a broad measure of credit and liquidity in the economy. Increased to 3,700. What was their forecast? 3,100 for the forecast, 3,730. So it's still higher than all of that. They're going to have to keep the money printer going burr. All right, let's look at India real quick, and then we'll get to the U.S. There's so much, and then we got Japan. There's so much. I cover all these things, guys. We got a lot of other things to talk about, but I cover all these things because I want you to know what's happening around the world. Because there's somebody that's like, hey, can you stop talking about China? I'm like, dude, what is my name? Macro to micro. You want me to stop talking about the second largest economy on earth that could be starting a Great Depression? I should stop talking about that. Yeah, no, go look somewhere else. This is what I do. If you don't like it, go somewhere else. All right, WPI food index year over year. All right, so let's read it real quick. Actually, you know what? We're not going to do that. You know who we're going to do? We're going to talk to this little guy right here. I really want Snoop back, but whatever.
India's wholesale food prices rose by 9.47% year on year in September 2024, sharply picking up from a 3.26% increase in the previous month and marking the fastest pace since August 2022. Among food articles, prices of cereals rose further 8.8% versus 8.44% in August, namely patty, wheat, and pulses 12.99%, while rebounding strongly for vegetables 48.73% versus minus 10.01%. At the same time, cost of eggs, meat, and fish continued to decline 0.80% versus 0.69%.
All right, so I might bring Snoop back. You know, I had somebody that said they didn't like Snoop, but you know
What up, though? It's Big Snoop D-O-double-G, and I'm an English voice from the United States.
Thanks, Snoop, but we're bringing Snoop back, at least for today. I'm feeling Snoopy. All right, so this is interesting. So India, I was going to talk about this later, but India is not lowering rates, and they're doing that because they're worried about inflation, and they're one of the only countries on earth that really, really is worried about that, right? Now, this is fascinating because we're looking at WPI food index year over year, and they had a forecast of 3.6%. Their previous was 3.26. In September, it was 9.47%. So they are seeing at least, a decent uptick in food inflation. I can see why they're keeping rates high, honestly, just looking at this one metric. Let's look at fuel. Fuel dropped. That's good. Again, they're getting a lot of cheap oil, and they can refine it pretty well themselves, from Russia especially. But T forecast 0.7%, negative 4.05. Let's just look at this here. This is year over year, so this is good. So fuel is not inflationary. Food is. Fuel is not. That's interesting. And then just the regular inflation metric. What do they have it at? So, if I can scroll down. Really got to fix my scroll. Forecast at 2. Consensus 1.9, actual 1.84. It's probably that fuel driving it down. Snoop and Jesse, a great combo. Yeah, I agree. All right, let's read this though. I want to hear what is all this about. It's just fascinating. Again, this is one of the largest. This will be one of the largest economies on earth. A very powerful one, and this is the next China. If they can do it right, they can be bigger than China. But they've got a lot of work to do. But so I'm very fascinated to see what's going on in the inflationary landscape with everything. So let's just listen.
India's wholesale prices increased by 1.84% year on year in September 2024.
Yeah, you're right. Damn it, you're right. I'm going back. He's right. I like Snoop.
My name is Cliff Weitzman. I'm the founder of Speechify.
I like
Speechify to help me with my dyslexia and ADHD.
All right, shut up.
Now, our AI helps
Cliff,
millions
shut
of
the
people.
fuck up.
I hope it can help you too.
All right. You're right. It's hard to understand Snoop. I'm going to go with that, Matenga. I agree. It's easier to understand this dude.
2024, accelerating from a 4-month low of a 1.31% rise in the previous month, but slightly below market forecasts of a 1.9% gain. It marked the 11th consecutive month of wholesale inflation, with primary articles rising at a faster pace, 6.59% versus 2.42% in August, while food prices advanced the most since August 2022, 9.47% versus 3.26%, mainly boosted by sharp rise in vegetable prices, 48.73%. potato 78.13%, and onion 78.82%.
Huh.
Meanwhile, manufacturing prices moderated to a 4-month low, 1% versus 1.22%, due mainly to softer rises in pharmaceuticals and medical chemicals, 1.47% versus 1.97%, and wood and products of wood and cork, 1.57% versus 3.17%. By contrast, fuel and power prices dropped the most in 10 months, minus 4.05% versus 0.67%, amid a faster fall in prices of petrol, minus 7.47% versus minus 4.23%, and HSD, minus 5.33% versus minus 3.03%.
All right, that's a lot of numbers, but interesting, still fascinating. Look at this chart. So wholesale price index change honestly has been pretty consistently going down outside of spikes in the pandemic since the 90s. So this is interesting. So fascinating data. Anyway, let's see. Manufacturing was 1% versus 1.2. I just want to get it. I'll probably glance through some of these a little bit quicker. Okay, all right. So their manufacturing is picking up. I like that for them, right? Inflation seems to still be moderate. Food inflation high, fuel inflation low, and trending down over the years. But manufacturing, honestly, looks like it's on a trend of picking up, and that's good for them. They have been in decline too, so we'll see if they can hold. But theoretically, they should be getting some of that manufacturing from China. Very fascinating to see. India's inflation rate. So, yeah, quite a spike. Again, I can see why they're keeping the rates up. They thought they were coming in at 5.1 and a consensus of 5, but they were at 5.49. So they're trying to keep, and again, with heavy amounts of growth, you have higher rates of inflation. It's pretty natural. Mexico, consumer confidence came in a little bit lower than expected. Let me just see what the trend is on this. Wow, but is it strong? Look at how much stronger consumer confidence has gotten in Mexico after the pandemic. You could see how definitely lots of manufacturing shifts to Mexico, making consumers a lot more confident. Last night for Japan, and then we'll get to our stuff, capacity utilization, it looks like is negative 5.3%, forecast at negative 1.3. So we're seeing a lot of pressure in Japan, guys. I mean, this is just look at this. Look at that. Look at how far it's dropping over since the 70s. It's just down, 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 down. Industrial production. Oh, I don't care about month over month. I do care about year over year. Negative 4.9%. And again, they don't appear to be a direct benefactor from China's demise with industrial or manufacturing. And I think that's probably normal because pay's higher there. So again, third world countries are going to do a lot better. Passenger vehicles in India went negative 0.4%. Let's see how that looks for them. So a little bit of a slowdown. Wow, really crazy drops from the 2018 to 2022 range. Wonder what all that's about. Maybe just a flood of Chinese cars? If that's the case, it's interesting that they're going up now. Dave Chapinda, massive. Why somebody do that today, bro? What did they do? David, anybody know? I'm not familiar with options. What happened, David? What about the options on CleanSpark finishing today? Why they had so much interest on $20? I don't know, dude. I'd have to look. I don't know. The whole robotic sounding voices are just a bit distracting for my tiny brain. Sorry, Oak. But you're stuck here because you got nowhere to go because you're off X. So you're just going to have to deal. All right, Canada, real quickly, glance over this. Inflation rates in Canada plummeting. Expected 2% for forecast, 1.8 for consensus. They got 1.6. I've said this before. Canada is going to go into deflation. Just like China. They're way too tightly intertwined with them. It's problematic for them. Core inflation. Core inflation was 1.6%. Again, look at this. Look at this crush, guys. Look at this crush. It's insane. So again, they got worries. They got worries. They're not the world reserve currency, and they're too tied to China. So median CPI year over year. What did that do? It did 2.3 consensus. Okay. Again, massive crush there. Wholesales down less than expected. We don't really. Let's see. I'm just curious what the long-term trend looks like. They're weaker. They're not doing as well. Post-pandemic, Canada looks weak. You guys are probably feeling it, I imagine. All right, now to the U.S. markets. Let's get to the good stuff. Oh, wait. What am I looking at? Oh my God. Did I go way back? All right, now I'm going to cheat and we're just going to move forward. I was literally way back at the beginning of the week. I'm so sorry. I'm so sorry, guys. Oh my God. I can't believe I just did that. Deep apologies. All right, so the house price index. Let's get to the right time frame, and we're real close. Actually, we're still waiting. It looks like we're probably just getting building permit data. Let me hop into that real quick. We'll look at Rick Santelli. So sorry. Let me get the building permit data from him. Hey, at least you got a good refresher because I didn't cover that stuff good earlier in the week. Let's see here. There we go. Let's go back. I'm 5 minutes late on this. Sorry, guys. Congrats, Mike. I'm glad Micron's working for you. I post a lot in Discord, generally crypto channel. Cool. All right, so let's listen to the latest economic data.
Welcome back to Squawk Box. Rick Santelli here live on CME HQ with the breaking news of the morning. That's housing starts and permits for the month of September. We are expecting 1.3 million on the starts, very close. 1,354,000, that's seasonally adjusted annualized units, spot on with expectations. Cool. A subtle revision in the rearview mirror. How does this figure? Well, it's very close to last month's 1,361,000. And if you go back, it's pretty much some of the best numbers of the year. Now, if we look at the
So revisions weren't too bad for housing starts. Cool.
permit side, a little bit different equation here. It's coming in under expectations at 1,428,000 and a very subtle revision. Maybe the biggest news is that July was super weak. And if you look at July on the start side, it was the weakest since May of 2020. On the permit side, it was just a whisker away from the weakest since June of 2020.
And again, this isn't crazy. Rates jumped again over the last couple of weeks because of all the weirdness in the bond market and treasuries. So it's not weird that we see a slowdown. And again, I don't really expect things to pick up. And we have seasonality. I don't expect things to pick up until later.
Why am I bringing that up? Because that was Hurricane Beryl that hit in July, so you see the effects. But then it came back pretty good as we see the last couple months. Construction picked up again. But in September, of course, we all remember we had Helene and preps for Milton. So these numbers might not be exactly as strong as they may turn out to be next month. You might see a better pop, but they have been running on the weak side. Big news of the morning, of course, gold all-time highs. Bitcoin and the dollar. It's really kind of interesting how they're correlating together. They're both basically at 2.5-month highs. And on interest rates...
Dude, don't correlate Bitcoin to the dollar. Come on.
Rates? Well, if we were to close right now, 10-year hovering at 409, it'd be basically unchanged on the day, unchanged on the week. But if you take a step back, since the big jobs report on the 4th of October, these are basically some of the highest yield closes in the Treasury complex. Andrew, back to you.
Rick, thank you for that. Meantime, we want to go over to our friend Diana Olick, who joins us with more. Diana.
Well, Andrew, I want to look at what the difference is here between single-family starts and multifamily starts, because that's what we really need to understand for the housing market going forward. Single-family starts were much higher. They were up 2.7% month to month.
That's cool. This is good. Multifamily, like we've been building a lot of apartment complexes. We need more single-family buildings. So I like to hear that that number is doing better.
5.5% year over year. And what's interesting is September's number for single family was revised significantly higher. Multifamily is coming down.
Cool.
And we know that because we had this very big oversupply, more than 1 million units under construction last year and this year for multifamily units. So we expected those to come down. But single family mortgage rates, and this is the key for the home builders, mortgage rates had come down significantly in September, close to 6%. And the expectation was that after the Fed cut, that rates would come down even further. Well, as we know, they didn't. They actually went up. In fact, we're now at around 6.7% on the 30-year fix.
No.
So home builders were expecting that. They were buying into that, and they were starting that. But if you look at the building permits, we know mid-month that rates went up, and so that's why the permits may be weaker on the single-family side. Interesting, though, builder sentiment that we got yesterday still ticked a little bit higher. It was in negative territory, but it ticked higher because builders said the expectation is that mortgage rates will still come down at some point. They said it will be uneven, but into next year, we know the
Yep. Especially springtime, you're gonna see the market open up. Rates are gonna be a lot lower, definitely in the fives.
Big builders can buy down mortgage rates, but some of the smaller and mid-sides, they're unable to do that. So again, this is a positive on the builder side for single family going up, despite the fact that we know mortgage rates are coming in higher now. Andrew?
Diana, thank you for that. We'll keep our eyes on rates and what's going to happen next.
Awesome. Lowe said, I still fully don't understand how China's demise leads the U.S. markets to melt up. It's just part of the equation. So we have every major economy in the world that is highly indebted. We've got China that has basically threatened the West, built up, militarized the South China Sea, threatened all their neighbors in the South China Sea, said this is all ours, has disputes about boundaries with like 15 different neighbors around them. They've just been belligerent. Well, I should say not China, but the CCP and Xi Jinping have been belligerent. You've got them starting to, have Xi Jinping's thoughts, like, the Book of Mao kind of, and to improve your social credit score. You've got all this. You've got them taking Hong Kong 20 years before they were supposed to. You've got all this aggression and threats to Taiwan. So you've got capital outflows. You've got companies leaving the region because they want to still work with the West, and their economy has just become a lot more expensive. And there's really better deals for moving manufacturing to areas like Vietnam and just everywhere else. If you're a rich tech company or financial, you're probably going to Singapore. You're getting the fuck out of China because of all the political risks that you have there, and the threat that literally you could lose massive amounts of your manufacturing sector. So the whole point is everybody's leaving China, right? Everybody's leaving China or trying to diversify away from China because of these risks. And so their demise, as we watch them fall and watch it accelerate, we'll see more and more companies flooding capital, just trying to get capital outflows, trying to get it to where they can just get away from China. And some of these companies, they might just literally try and get away and get to countries that won't extradite them back, where they can just flee with the money that they have if they're really worried about a collapse. So you're seeing you're going to see flows coming out of that, but you're also seeing rates coming down across the world and liquidity increasing across the world that is also going to be melting up markets. So it's a combination of a bunch of things, right? It's a combination of a bunch of things. China's just a part of the equation. All right, real quickly. So let's just look at what they talked about with building permits and housing starts. And then I want to look at the actual Chinese data from last night and talk to that. I do apologize. Building permits. Again, so what did they say? We expected 1.46. Consensus was and forecast, but we got 1.428. If you look here, again, these have had a nice bounce since 2008, and then they got crushed because rates were, raised at the most aggressive rate in history, but the trend is up. I expect that to continue. I expect this to be a blip for maybe the next month or two where we see, these things wane because of seasonality and because of higher rates. Let's keep going. Housing starts. So housing starts, again, they're down. They're down because of the most aggressive rate in history, but the trend is up. And again, the forecast was 1.38, consensus was 1.35, actual was 1.354. Those were pretty good. And like she said, we're doing a lot more single family. I like that. I want to see more of that. That's really what we have for economic data today, guys. We're not really dependent upon economic data today, and it looks good. Now let's look at what happened last night with China's data real quick here, okay? So house price index, year over year. Look at this. This is the worst thing you could ever imagine. There's this period over here where their housing prices fall, but I mean, when you go up 10% in a year, you can, and then just look at these numbers. When you've got massive increases each month, then you expect a drop. Peter, thank you for gifting 5 memberships. I appreciate you, buddy. You expect a drop, right? And then when you go up again and you've gotten to 12.6% in a month for housing prices, you expect a drop. Didn't even go to negative territory, though. So these are all still increases in the prices. But look at what's been happening since the pandemic, or I should say since about 2022, early 2022. Just negative, 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 an accelerating rate of price depreciation in their housing market that was 5.7% in September of 2024. This is horrendous. Imagine if you lost 5% of your house value in a short period of time, how that would feel, especially if you just bought it and you're already underwater. That is the real situation that China is dealing with right now. The GDP growth rate, I don't even know if I should look at this because it's completely fabricated and bullshit. So we'll just skip it. Again, there's no way to validate the data. They removed 95% of their economic data metrics so that we can't confirm any of this. It's a fictional number now. Industrial production. I mean, I don't know if this is a lot better, but let's just go through the list. So, again, I don't know. Looks like it's waning at the end. It's been waning for a while. Again, it's so hard with China because it's just like you don't even know what data you can trust anymore. It's such a banana republic bullshit country nowadays when it comes to data. Retail sales are up. Okay. Your retail sales are miserable, though. Your service economy is non-existent. And if we look historically, since the great financial crisis, we've only seen, a decline in the rate of expansion in retail sales. So this isn't making up a bigger part of your economy. It's not even interesting. Fixed asset investment year to date. Let's look here. So 3.4%, perfectly in line. But again, it's going down. The trend is leave China. GDP growth rate, again, just another bullshit number. I won't even look at it. The unemployment rate, also complete bullshit. Looks like the unemployment rate is getting better. It's not even a real number. Industrial capacity utilization, let's just glance at it. So it only goes back to 2013. I don't know. It's kind of in the middle. But again, there's so much of this data you can't even trust. And look at the other stuff that we were looking at today, too. All numbers coming out of China, CCP, not people, is fabricated for age. Yeah, and it's really, well, see, here's the thing. For a long time, it didn't have to be. But once the pandemic kicked in, they had to fake it. At that point, it was too late. They had to fake it. And so the best way to fake it is make it all go away. Make it to where it's impossible to validate the information without weird metrics like looking at, the lights at night and trying to determine economic growth, or looking at, imports, exports. Those are some of the best metrics we really have. And again, the housing price index, they can't really hide. There's some things they just can't hide. But again, it's not good. It's not good for them at all. Let's look at India here and what came in last night. So India bank loan growth has plummeted, but you have to look at this too from the time frame that it exists. Why don't they have year? Okay, they don't show the years. Weird. But since 2021, look at the loan growth rate, percentages to the upside. It's been insane. So this to resettle, honestly, is probably just finding an equilibrium, because that amount of loan growth is off the charts. India deposit growth year over year. It looks like a positive trend since 2018, right? This is good. So India is seeing loan growth. They're seeing expansion all over the country. They're seeing savings rates go, or I should say at least deposits going up. Foreign exchange reserves. They're rolling over a little bit, but look at how much they're ramping. They're holding a lot of foreign dollars. Okay, so that's it. So again, Argentina at 2 p.m. this afternoon. I'm very excited about that. Let's move on here. So we talked about China. We talked about commodities. We talked about Fundstrat's concerns about the economy, or about the stock market dropping 5 to 7%. We talked about Bitcoin breakout imminent. The market's going to open here in 40 minutes. Let's see how. Let's go back here real quick. I want to see how. Let me just move some things over here. I want to see how the stock market heat map index looks. Not too bad. Tesla's still doing all right, honestly, considering all the FUD. We're going to be jumping into that topic probably next. But again, this is so beautiful, guys. Look at that breakout. Look at how close we are to a breakout. If we end the weekly anywhere near this, it's insane. Let me see. Again, thank you to Peter for the gifting the 5 memberships. I really appreciate it. Joe Barassus, morning, Jesse. Curious, when bidding on the price of an options contract, when do you determine to increase the price if the sellers aren't accepting the bid? It just really it depends on so many things, man. I kind of covered a little bit in the options 101 video, but you need to figure out, A, is it a good price? And then also look like, oh, okay, it was down 10% today on the contract. I need to bid a little bit higher. What is that? That's probably 8% down now. Is this still a good price point for me? Yeah, I think so. Do I really want in on this? Yes, I do. Okay, let's go ahead. Let's raise it a little bit. Let's raise it a little bit. And you just have to, it's one of those things where you have to figure out how much do you want the contract, and how much you want the contract is dependent upon how oversold is this company, what is the potential for it to go up a lot, and have I allowed more than enough time for all those things to be able to happen without having to worry about risk to the downside. Again, options are very dangerous. I don't F around. I'm not the kind of person who's like, bro, get options 0 day for tomorrow. You make so much money. Get rich. I'm not that guy. Options are a dangerous and deadly tool. They're also an amazing tool. So I think it's one of those things that you really have to pay attention to and make sure that you understand and take it slow. That's my advice. Lowe's says, yo, if you see this, hit the like button for the man. Thank you, Lowe's. Rick, with rates looking to drop, what would it make sense to buy into TLT? Eventually, right? Like that's my plan eventually. Right now, it's Bitcoin. It's Bitcoin, Tesla, and a number of other plays. It's a melt up. You don't buy bonds during a melt up. Bonds flounder during a melt up. And we can see that if we look at TLT real quick, we can see how it's floundering, right? It was down 1.58% yesterday. It's literally on peak volumes right now, trying to find support. It could find support there. If you were buying it as like cash, and it's actually a little bit underneath, it looks like, but if you were buying it as a cash position where you realize that you could lose a few percent, maybe 10% even, because there is downside risk still in this, even though this is down 50% from its peak, back in 2020. It still has downside risk. Now, I don't think a ton. I think honestly, like it's probably like 4.5% on this, especially if Trump gets elected. Here's what you need to think about with bonds. The only reason you should invest in a bond as a hedge is if you think that the government is going to get better at lowering the rate of interest rates so that they have less debt to service. And also, hey, Tesla Tracker, thank you for sharing my stream. I appreciate that. I just saw that come across the feed. If you guys don't use X Pro, you totally have to. It's amazing. It allows you to be able to do a lot at once. I couldn't run this stream without it and keep up with what was going on in the world. But yeah, so with TLT, you want to make sure, you want to look at it this way. You want to look at it as, is the government going to get better at being able to repay their bond debts? Is it going to be sustainable? Because people sure as hell don't want to invest in 20-year bonds. This is the government paying you back over 20 years, right? If they think that the government is going to fail. So they're not going to do that at all. So you have to have Elon Musk and Doge, right? You have to have the Department of Government Efficiency cleaning up government while we embrace Bitcoin, like Donald Trump has talked about, while we have pro-growth policies, not high taxation policies. Not policies for reparations for black people. What about all the other people in this country that are struggling? It's just stupid. I mean, the intent for reparations, the intent for DEI, I don't think those things are bad. I just don't think they're effective. Okay. I get why you want to take people that are disadvantaged and help them, but there's the right way to do it and the wrong way to do it. That's why I hate that stuff. So if we elect Kamala, though, I don't think TLT is a good option. I can't even look at that as a hedge. But if we elect Trump, I'll totally be buying this. I'll be putting this in when I cash out of other things and make a bunch of money, I'll be buying TLT. And when I think that this thing is really at the bottom and that it has the potential to go a lot higher over a decent period of time, because there is bullish divergence that's been building up in this, right? If we look just at the RSI over here, you can see how it bottomed hard on this time frame, the monthly time frame. And it did that back in October of 2022, right? So there's divergence that wants to pull this thing higher. But like PayPal and some of these others, it could still take a while. But again, that's my thought process on it. I hope that helps. All right, let me see here. So yeah, we're going to jump over into some other stuff. I'll try and see. Okay, see, it looks like you guys talked a little bit about China. Let's go over that real quick. And while we're doing that, I actually want to pull up. I want to keep it on Bitcoin. I want to keep it on Bitcoin because I love Bitcoin right now, man. I think we're literally getting ready to break out. All right, so OK says all numbers coming out of China, CCP, not people, is fabricated. Yep, it was always controlled by the CCP. They never let it. Yeah. Well, there were ways to validate it because they had Western firms in there, and again, they were much more open before Xi Jinping. There were some leaders there that they've all been silenced and done away with and imprisoned, but there were some leaders there that were actually good leaders and embraced the West, and I think they had good intent. Not all of them, like not most of them in the CCP, but I think there were some that really wanted to embrace democracy. Marcin Franek, thank you, Peter. Goes from Poland. Okay, since the last pop started, I've been calling it China's dead cat bounce. It totally is. Haywood says Jablomi. No, I'm sorry. If China market craters, will it cause global crisis? It would seem like that. That's what you would just think, right? But if all the money is flowing out, but China's the producer of everything, right? Everything, all this cheap shit. And so they will still need to produce those goods because it's the only way they really make money. And they're desperate. They have to buy food and oil and energy from other parts of the world because they just don't have enough. So if they're to maintain anything at all, they still have to build. And even if their economy tanks, they still have to build. And what happens is companies that are in there get worried and they all start to leave. And when they leave, they go to other countries, which enriches them. Those countries are our friends and allies. We're doing more business with them all the time. I've been saying this for 2 years. China's demise will be one of the greatest beneficial things for the United States of America. And I don't think people believed me even a year ago or even 6 months ago, but I think they're starting to now. And it's true. Ali Shahabi, sorry. Hey, Jesse, what do you think about call options for CleanSpark for November? I don't like that time frame. I think it's too short. Again, I want to be directionally right, and I want to give myself enough time to be right. So that's why my stuff, I think, is like July or June, because I want to know, I think we're getting to $32 by spring, but if we don't get to it by spring, I think we still do it for sure by June. So I'm just giving myself I think this is 99% likely to happen. Do I think it's 99% likely to happen in November? No, man. It's like not even a coin flip. It's maybe 50%, right? So that gets a lot more scary. So I like to buy more time. If you haven't seen my Option 101 video, watch it. I push it a lot on here just because I want people to be safe. I think safety is always the best medicine when it comes to option-related stuff. And I'll throw it in chat again. Just, again, be cautious with options. Options are a great tool. They're also the devil. Okay? If you're going to dance with the devil, make sure you understand it. All right. Theo. Hey, Jesse, I signed up for Discord yesterday, starter pack. Does that allow me to talk here on YouTube? It does not. It does not. But if you do like $2 on YouTube, you could talk on YouTube. So, or you can talk on X right now for free. So it's up to you. In X, you get other benefits. So here's kind of what it is, guys. YouTube, I hate the most, but it's got the best product for distributing videos. It really does. It's better than X. So $2 for YouTube gets you the ability to have chat. Discord gets you the ability to have this entire community, and there's so many smart people in it, and they're talking about an array of different things. And I get some of my news stuff from it, okay? So Discord is great. You also get all of my you get all of my trades, which I haven't traded anything since Tesla. You get my portfolio allocation. You get the charts. I still have to update the portfolio. Let's just call that this weekend and be real. You get all the X posts that are alerts here that are shared with the community. You get YouTube, so you can see that stuff in here. And again, you get the ability to be able to say, hey, can you fix this? Can you add these tickers? I got a bunch to do. That's this weekend too. And again, you can see topics from people in regard to Enphase. You can see topics from people in regard to Micron. You can see, and it's not just me. And then also I pin things at the top where my charts are right there. So you can see the latest version of my chart And you can request charts. You can request different tickers. So again, Palantir, you can go up here. You can see my Palantir chart. And I plan on adding more tools for different companies that are especially applicable to. So that's what you get with Discord. You get a lot of the community. You get a lot of talk that doesn't necessarily happen from me, but is good stuff. Okay. And then you get all the other archive stuff. And then on X, you get timely, like, hey, here's a post from me. I think this is happening. And you get my trades immediately, where they might be delayed on Discord. And you're supporting X, which I love. So ideally for me, I would rather have people supporting X, which is $5, and then supporting the Discord, which is $5. But then again, if you want to be on YouTube, it's $2. It's the cheapest because I hate it the most. I hope that helps. I hope that clarifies. All right, stocks intake. Do you think MSTU and MSTX is still a buy? I think MSTU is the better buy right now. And yes, I do think right now is the time to get it. It's up a little bit today. It's up 1.8%, but I love the base that we've established. And we went from 230, 229, all the way down to 186. I think that was like a really good time to buy. I actually did a subscriber-only post on X. I think I still shared it on Discord, but I for sure showed it on X, talking about this very thing just like, I don't know, 24, 36 hours ago. So I think it's a great opportunity, especially with what Bitcoin is doing right now. If you want a good levered play that isn't like CleanSpark or a miner, I think MSTU is probably the one right now. Oak. Theo, the memberships are separate. One doesn't gain you access to the other. Exactly. I think it comes out like $12 a month if you subscribe to them all at the basic level. Yes, that's true too. And if you just do like X and sometimes you might get gifted a membership on YouTube, but if you just do X and Discord, it's 10. And I don't think that's crazy. And here's the thing. I'm not raising that price next year. I'm not doing it the year after that. Okay? So if I raise the price, it's going to be slow as hell. It's going to be like 5% inflation. It's going to be like with the rate of inflation, maybe 10% in a year eventually, but I'm not doing it anytime soon. And I'm not doing $2,000 courses. So I will not screw you and try and take your money and then have you lose a bunch of money while you give me money. That's not my intent. Tesla Tracker, you're so welcome. Thanks, bro. Dave, I don't hear anyone talk about Coinbase. It might be a Trump stock now that I think of it. Coinbase can do good. It's just a large cap. It's a pretty large cap, and I like other plays better, like the miners, because they're smaller caps. They're going to move more. So I like them better. But Coinbase can do well. Dave from X says, oh, no, that was you. Sorry. Rick, thanks for the input, Jesse. Tesla Tracker, Coinbase will do very well. I agree. I think it'll do well. I just don't think it's as, I like MS, I like MicroStrategy, especially if you're doing MSTU better. Because then you don't have to mess around with the options, but you get that levered play. And again, it's leverage, so it can erode a little bit over time. But I like that play, and then also I like CleanSpark. I like the miners more. I just never found a good option contract for Coinbase. That's the only reason I don't talk about it. I like the company. I use it. It's where all my shitcoins are. Victor Hernandez, good morning. Tesla Tracker, more interest in crypto means more trades, more fees for coin. Dude, I've been seeing so much crypto crap coming up in my feed when I'm filtering in Pro for Bitcoin. I'm having to block a bunch of those feeds. It lets me know that we're getting ready for that cycle. So I agree. I think Coinbase can do really good with fees. I do agree a lot with that. Mad Dog Teflon Boy, do you use Mac or PC for your streaming setup? You have to use Mac. I had a PC. I spent a fortune on it. I think I got it I've still got it. I don't use it for anything, but it's got like a 4090 video card, all this crap. But it was completely unstable. My Mac, I'm running off a portable right here. This is my video camera too. My portable Mac costs like $4,000. Perfect. So I would only use a Mac. I do want to get a bigger one though. I want to buy like a $10,000 Mac Studio, like some ridiculous setup. I just need to figure out when they do their releases. Because I want a badass one. And then I want this portable one for when I start traveling more. Bitcoin, 67,800. We are 26 minutes from market open, guys. We are pushing hard, guys. This is getting exciting. Tesla Tracker, you don't need to hedge against the election. The market is about to run after elections, no matter who gets elected. Well, there could be a retracement. I actually think my latest thesis, and again, I don't care so much about the short term. That part I totally agree with. I think, though, that but after the election, if we run up into the election, which I think that is actually my thesis right now, if that's what happens, then we could have a retracement after it. So it might not be bad to get a few percent in cash just to be able to do some dip buying, because it always feels good. If nothing else, I tell people this. I should probably have this like be a part of a course or a free course in my Discord for anybody who pays $5 a month. But I should probably have something that talks about like investment things that you really need to understand. One of them, I think, is that you should, whatever you think there's going to be a pullback in the future, giving yourself even a few percent of cash makes it feel better, because you can psychologically, you can buy that dip and then you feel like you're getting a sale. If you're all in, all you'll feel is pain. So the emotional reaction and that can dictate what your actions do. So I like to give myself a little bit of, it's going to be all right. So that's just a thought. Let's see here. What about companies reliant on IRA or Inflation Reduction Act or others closely aligned to politics with Elon? I think they're going to do really well, because I think Trump is winning. He's crushing it. He's literally, I think he's going to win. I think it's too big to rig. Now, everybody needs to go out and vote, but I think he's won. And here's the thing. If he doesn't, then you're going to see underperformance, most likely, in things that are associated with Elon. The IRA, I don't know. I don't even care. Here's the thing. Tesla will benefit from a Trump presidency. If you can't see that, the man is literally campaigning for him, and this is going to be and Trump would be the person who has the greatest amount of power on earth. So, it's going to help Tesla. It's going to help SpaceX. It's going to help Neuralink. It's going to help the Boring Company. It's going to help everything he touches. All right. Lim Jing-yun says, any war or defense stocks, look, LMT, you looking just in case? I think Palantir is probably the best war stock, in my opinion. But I also think Palantir can trend sideways to down for a while. So I don't know. Outside of that, I don't have much interest. I mean, Anduril, private markets, if you're looking to get in early, I don't even know what series of round of funding they're on it, but you can buy in different ways depending upon where you are. Anduril is a really good company. I love Palmer Luckey. I think he's brilliant. He's the guy who created the Oculus Rift, that is now the VR platform for Meta. And then he got screwed because a bunch of liberals screwed him. Did you guys hear about all the other engineers now that are in this like investigative journalism thing from Meta that were also saying, yeah, we totally worked to rig the election? It's insane. I think we're going to see Mark Zuckerberg apologizing again after saying, I'm never apologizing again. Booking tackles, where do you see Riot's potential compared to Iron? I like Iron better right now. I can do a video where I maybe look at them more, or maybe we can talk about that in a little bit as we start to go off here. But here's the thing. They're all going to go up. Some have bigger market caps than others. So let me just show you this. Let me do this. Riot. Let's look at their market cap. How big are they? And then we'll look at some of Sebastian Ski's work. I highly encourage you guys to join his Patreon to support him. I love the dude. I think he does great work. So here's what I want to look. The market cap, $2.8 billion, right? That's Riot. So they're a $2.8 billion company. Now let's look at Iron. How big is Iron? Iron is a $1.68 billion company. So it's about 60% the size. So it gives it an advantage right out of the gate. Now, we could look at hash rates too. And then let me show Bitfarms. Bitfarms, I think, is just so undervalued, and it's just going to be sweet. I'm still happy I moved to it, even though Cypher is running more. And Bitfarms has not caught a bid. I love it at this current point. If it stays low, it's only up to 2% in pre-market. If it stays low, I'll buy more. Why? It's only 848 million. So Riot is what? 3 times the size of Bitfarms. And again, Iron is 60% the size of Riot. But if we look over here at these miners, let's just look at some of this real quick. So let's look at the hash rate that they put out. Let's look at Iron's. Core Scientific is just a shit company. Hut 8's a shit company, even though Sue's a cutie, but hate the company. Iron. So look here. So you can see BTC sold. They don't hold any. I hate that about them. But their hash rate, their current hash rate says what? 21 exahash? That's a pretty good number. What is Riot's? And so let's see how much Bitcoin did they get? September. Hash rate jumped a lot, 21 exahash it says in here. But let's look at the Bitcoin revenue value. So they made 21 million, and their Bitcoin per exahash 16.2. So let's see here. So it doesn't take a lot of exahash to get their Bitcoin. Let's look at Riot though real quick. There we are. All right, so their hash rate is 28, so it's higher, and they've got a Bitcoin HODL stack. I love that. I guess, honestly, I mean, Riot isn't that bad. I like that they're not selling their BTC. Look through here. Unlike Iron, the one thing I hate about Iron, they're selling their Bitcoin. Iron has that HPC play, though, so if it turns off, that's literally why I'm in Iron, is for the HPC play. And their expected growth here is 42 exahash, or close. And their revenue for last quarter was what? 24.8 million. So let's just look at that number real quick. So that's still Riot, right? Yeah, 24.8 million. So they're not selling Bitcoin. They've got a large stack, over 10,000 Bitcoin. I like that. They're gaining value on that, right? Every month that goes by. They made 412 Bitcoin for 25 million. Let's look at Iron now. Let's find Iron. I wish there was an easy way to find them on the right. So with Iron, we have 21 million in revenue, which is interesting. They're close in revenue, and 347 Bitcoin, whereas what did we have for Riot? We had 412. So again, they're a little bit behind, but Iron's growing pretty good. They have the HPC revenue. We'll see if that turns into a thing. But Riot isn't doing bad. Where I struggle with Riot is I think CleanSpark's a better company. They're currently at 27 exahash, so they're larger. Their Bitcoin stack is smaller, but man, look at its growth. They don't sell any. And again, their revenue is 29.76, which was greater than Riot's. And their market cap, what is their market cap right now? Is it 6 billion? No, 2.25. So it's lower than Riot's. So this is where I struggle. I look at Iron as an HPC play, and I look at CleanSpark as a better version of Riot. And I wouldn't have said that a long time ago. I loved Riot. It was my favorite miner. But it's just better in every way. And if you look right now, revenue-wise, Mara is really still in the lead, 39.7 million. Their stack is huge. They also bought some here, which is kind of cheating, but whatever. It's brilliant. And they got 657 Bitcoin in the last quarter. So I still think Mara is by far the leader. And then I put CleanSpark in second place personally because I don't care about the rest of them. And then Iron is my HPC play. And then Bitfarms is you know what Bitfarms is? Bitfarms is this is stupid cheap because Cypher is a $1.3 billion market cap. Even though the dipshits just sold a bunch of their Bitcoin to get more expansion power. That is the dumbest thing they could do. Look at this huge sale, 923 Bitcoin. That was at a much lower number than we are today. I would have instead diluted shares like people hate about CleanSpark, right? I would have done that instead because now these guys only have 1,500 Bitcoin. They've got 9.3 exahash for hash rate. Bitfarms has a higher hash rate and they're gaining. They're going to be close to them. Maybe in 2 quarters, they'll have more Bitcoin than Cypher does. And again, and their expansion plans are 21 exahash. Cyphers are only to 13. So I personally like Bitfarms better. I like Stackers better. I wish they wouldn't sell any Bitcoin, and I wish they would dilute shares more. But their market cap's only 852 million, whereas this one's 1.32 billion. So I like Bitfarms for a small play. That's why I'm in these. That is my minor play, guys. That is what it is. Now, jumping back over here, we got 17 minutes until market open. I do want to go back over to the Bitcoin price. 67.8 is so breakout zone, guys. It is so breakout zone. Let's look over here real quick, though. We also have the heat map, so I'm going to put that over here. And the heat map is showing Tesla recovering, only down 0.31%. Market looking strong today. No other economic data coming out. I think today's going to be a beautiful day. I'm very excited about it. Joseph Mock, what are we buying, fellas? I have no money left. I'm not buying anything. Book and tackles, where do you see Riot's potential compared to, oh, that was you. Eric X, hey, Jesse, what's your take on ETH? I have a little. I actually think, so that's a good question. I like that question. I don't have much ETH at all. I do have some. I'd have to look and see what it is. I'd say 1%, maybe 2%. It might be a little bit more. I don't know. It's probably 1 to 2%. But I do think ETH could outperform over a shorter period of time. But I think Sol is going to steal their lunch. Personally, I'd rather be in Solana. But think about tax complications, too, of any buying and selling right now. Lewis, how do you feel about Tesla before earnings? Sell, buy, hold. Tesla. That leads into the segue of talking about Tesla. Thank you very much for that. Lewis, you've accomplished my goal. So I think Tesla could roll over. I think it's going to roll over. And maybe it happens before earnings or after. I don't care. I am looking at applying at least another 6 figures to it. So I am negative on Tesla over the short term, but I'm excited. Oh, wait. What did we get from CleanSpark? CleanSpark will be adding, DR Lewis says 7 exahash, 23.3% in the next 75 days. So what are we at for CleanSpark right now? So people need to understand CleanSpark. I don't get it. CleanSpark is at 27, so they're going to be at 35 exahash in the next 2.5 months. Does that seem impressive? They're going to be at 55 by the end of the year. Vote yes on giving these guys the ability to dilute their shares if you're not a moron. Because we don't want them to sell Bitcoin for expansion. That would be stupid. That would be a Cypher time to move. And I say that with 30 or 40 grand in Cypher, okay? I got money in Cypher. But I still think it's an absolutely stupid move to sell your Bitcoin right now. And I'm happy that CleanSpark is crushing it and doing the right thing. Good job, CleanSpark. All right. Do you think NVIDIA will go up again today? It is. It's a new all-time high today. Xian Ho, MicroStrategy. MicroStrategy is a great buy. I think MSTU is the one to get into. Dave, there's a 3x multiplier on MAT as well. MAT or MicroStrategy? Oh, you mean a 3x? Yeah, there's like a 3MLI or something. Is that it? I don't know. That's a lot of leverage for me. But you could do that as long as the volume's good. Let me look at that real quick. Is that... I know there is something, and then we'll get back to Tesla, because we do need to talk more about Tesla. There's a lot going on with Tesla. Bullshit, FUD, all kinds of stuff. But let me look at MSTU real quick. And then I'll just kind of bookmark myself here. What, no monthly coupon codes? Yeah, sorry. But hey, it won't be $2,000 for my courses, so that'll be nice. It'll just be like $5, $10, and then you get everything. So let's look here. So this is the or is this? No, that's MSTU. MSTU is up 4.7% today. I think this thing could scream. What is it? 3M or 3MLI? I don't even know if I have that one. Is that the one? Let me just look. I know there's another one, but I don't know what the volumes look like on the daily. So let me just name this one and then take a look. What is it? 3M something? 3L? Am I? Do you guys know? Let me look at your chat here. Maybe you're telling me. What's the 3X fund for MSTU, guys? You know what I'll do? I'll do this. MicroStrategy. What do we got here? Any 3Xs? Any 3Xs? 3X. There you go. 3LMI. Let me rename this. I'll share this. I got to remember to do that. 3LMI. So there is this. What's the average volume? It's light, guys. The volume is really light. That's my worry about this one. It just does not have a lot of volume. It's Granite shares. Maybe that'll pick up in the future. I don't know what the expense ratio is, but you're getting a lot of leverage here, and I don't know what the volume is. So I'm a little weary on this one, personally. But let's get back to Tesla, because we got stuff to talk about, and it's important. So again, this is a bear flag, and I feel like it's going to roll over after earnings. Trade is suspended in the UK for some reason. Why? Can somebody check into that? What's going on in the UK? That's crazy. Let me know if you see anything. All right, so let's go into the Tesla part of the segment, because we do need to talk about it. Hey, look at that pretty face. It's not mine. It's an AI version of me. All right. The leading source of news in the UK is X. I love that, because they hate X so much. The leadership there hates X so much. All right, let's look here. So go to Tesla. Talk about Tesla. All right, so bullshit FUD. NHTSA, the National Highway Traffic Safety Administration, going after full self-driving because of 4 car accidents that might have had like dust or fog or some debris in the air, and there was a collision that occurred. One was a Cybertruck. The others, look at the dates on them, guys. Year 2017. Oh no, that's just for the vehicles. Okay, I got it now. All right. So, but again, they're looking because they think there's some kind of defect that is causing the accidents because visibility was poor. Sun glare, fog, airborne dust. Again, it's full self-driving. It's full self-driving supervised right now. Okay, and the next version coming out in the next few weeks is 6x better for interventions. It doesn't mean you don't still have them. This is bullshit. It's bullshit, and the market doesn't care about it. But I do think it'll be a narrative that can bring the stock down in conjunction if earnings aren't great. So I want to voice it. Here's a good thing, at least, and I don't know if this is just in China, but Tesla is pushing the 30-day trial again for their product, and I think that's great. Again, Bloomberg pushing. This is such bullshit. Tesla's reveals of its much-hyped self-driving car left investors underwhelmed and raised questions on Wall Street of why their shares are at a premium. Stupid company. Again, Tesla, everything Elon Musk. Remember when people are trying to cancel X over anti-Semitism? Yeah, it was nonsense. Look at this relationship between platform usage and anti-Semitic and anti-Israel views. X is the lowest. Instagram is next. TikTok is the worst. Isn't that funny? So again, with earnings are next Wednesday for Tesla. I do think they could drop. 9 minutes till market open, guys. I think they could drop. I think we can roll down and fall another 8%. If Bitcoin is popping and Tesla is dropping, I'd be buying Tesla. Okay? I couldn't think of another rhyme. And I do think that Bitcoin is going to be popping. I think it's getting ready to pop right now. So get ready for it right now. That's my Nicolas Cage impression. All right. If you guys have any news that's out there, let me know. Let me know. I want to know. Any news, let me know. I'm trying to look too. But let's hop over here real quick. I'm going to get caught up with chat a little bit more while we wait for things to happen. I haven't seen anything too interesting on CNBC. If you see anybody talking that's interesting or see any of the latest news that's interesting, throw it out there into chat. All right. Let's keep going. Kamawa, Dave from X says, I bet Buddy Dinner that Tesla would go up if Trump gets announced. Oh, dude, totally. I agree. If Trump becomes the president, Tesla's going up. You'd have to be an idiot. I mean, you'll know that there might be a moment where there's some stupid narrative of, oh, the tax credit's going to go away, so Tesla's going to do bad. Tesla do bad, tax credit go away. But you best understand that in a Trump administration, Tesla will sell like crazy, and Trump will be incredibly supportive of helping them succeed. So just remember that. Kamawa says, do you see the cycle ending? Of course not for certain, but for your prediction. What cycle? Like, what do you mean? I mean, it's going to end at some point. Lucas, or would you buy the stock longer? Is $32 your top? No. I'm getting out of options at $32. I'll probably hold the stock longer. But I might get out of options and then try and time the next dip. There will be another dip in Bitcoin. There'll be like another. There's usually like, I don't know. There'll be another dip, probably another 25-30% pullback after we go to like, I don't know. Maybe we probably won't get another one by 92, but by the time we get to 150, you can expect another like 30% it's over pullback. So if I was gonna buy, a Clean Spark, I would do it again. Maybe if we retrace down to 80,000 from 92 or something, then maybe I'd buy Clean Spark. If we drop 25-30% and we're back, go in the hundreds for Bitcoin, and I don't think the cycle's over, maybe I would buy Clean Spark. But I'll be selling options and getting out by 32. Roy Hernandez, AMD. Yeah, what about it? Anything happening? Interesting? If you guys have stocks you want to look at too, throw them out. But really news. If you guys have amazing news that's coming up that I should be looking at, let me know. So AMD. Ooh, all right. I see why you're asking about AMD. This is a buy zone. This is the buy zone. Now, I don't know if AMD is good as a company right now. I just don't know. I don't know how much they're going to benefit from this sector, but this is a buy zone. You have previous, and I should let's make sure it lines up on the daily. Yeah, it does. Okay, so yeah, this is legit. Look at that. So you can maybe buy here. I just don't know financially how well they're going to do. I can look at Ionic. I think it sucks, but I can look at it and tell you it sucks. And maybe you can tell me why it's good. Nobody's been able to. Look at gaming revenue for NVIDIA or AMD. Data center going up. Revenue flat since Q1 of 2022. Forward PE, 29. Estimates are going up. EPS looking good, so net income's going to get better. So there's probably some growth here. There's probably a real growth story. Institutional ownership going up. I don't know. Some of these key charts are probably cool too. I might take some time later to look at them. But it's not a highly indebted company. Decent amount of cash. Operating expenses are all right. Not diluting shares. Gaming revenue sucks. Data revenue is going up. I don't know. It's just the biggest player is obviously NVIDIA right now. Can AMD catch up? I don't know enough technically to be able to answer that question. If somebody else does, let me know. Oak, it's not crazy. It's not crazy. I'm up 10,000 across all accounts, and it's just the start. The value that comes from subscribing is worth it. Thanks, man. I appreciate that. That's just on one trade, though. Dave, Harris said she wants to tax unrealized gains. That's got to spook some people. She said she can't do that, though. She won't get the House and the Senate no matter what. Even if they steal the election, she still probably won't have the House and the Senate. And I don't think they can steal it anymore. Oak, already took 1,000 in profits, so already paid for my membership and for years and years. Awesome, dude. I appreciate you, brother. I really do. John Harrison, wow, drug. Is this one shitty fucking thing again? Is this the latest pump and dump? Is this the latest GameStop? No revenue. Yay. Their net income's up on no revenue. Awesome. Super exciting. I love it when companies don't make money and have negative cash flow. They do actually have some positive cash flow last quarter, but they made no money. But their EPS, they still have no revenue, but their EPS is going to pop. I mean, I like this part. I like that the operating expenses aren't through the roof. But what is this company again? Why did people give a shit about this company? I don't remember. Let me look here. I know we have it in here somewhere. I just don't know why people care. I got to get all these added in. I'm going to get all these tickers, guys. There's going to be a massive amount of tickers coming in. And again, make sure that you have your alerts set up correctly and that they're not super annoying. But I'm going to be adding a ton of tickers over the weekend here and Discord. So like, if you like that stuff, great. Oh my God, Jesus Christ. Stay the fuck away from this. Stay the fuck away from this. I don't know. What is the news on this? How rich are they going to get? Why does this company matter? It literally on the daily time frame, the RSI got to 98. I've barely seen that happen before. It is always a sign to get to GTFO. Do not buy this. I don't even care what the news is. Brightmade Bioscience launches $35 million private placement. Stay away. It's garbage. Just stay away. Lucas, is PayPal stock, not option, a good buy here? I would rather be in Bitcoin-related investments than PayPal if you're not doing options. Do I think PayPal's a good company and a good buy here, though? If you're okay with like slow growth and getting way less in returns, yes, I do. I do. All right, let me see here. I'm just going to put that out there. There's just a post I wanted to repost here. It's about Bit Digital. All right, yeah, so keep going. We got 2 minutes till market open. I'm just going to go ahead and hop over to CNBC here. We're going to refresh. I think they're on break, but we'll just kind of let this run. And then we'll jump into tickers just to see how everything's going. I might even throw one down at the bottom here. Let's see, what time is it? It's 8:30. Yeah, I might do that. Thank you to the 560 people that are here. I appreciate you spending your time with me. I hope to provide value and service. All right. here we go. This is going to be opening up. We'll leave it here for a second. I am probably going to move. Let me do this real quick. I'm going to take a not shitty ticker.
Time for Kramer's Mad Dash as we count down to the opening bell.
Yeah, I do my top 10 things to watch every day for people who are thinking about the investing club. And I will say that my most important one was sales of Apple's new iPhone, according to an outfit called Counterpoint, which is a Bloomberg, provided to Bloomberg. Sales up 20%. This is completely
All right, I'm shutting him up. I'm just adding real quick down to the bottom of the screen, guys. You're going to see Bitcoin's price action. You're also going to see, on top of that, the percentage part on the right-hand side. Oh, no, I didn't mean to do that. That was the wrong one. Let me fix this. 1 second. That one? I think that's the right one. We'll find out in a second. I want to fix the stock one. Sorry about that. So in the bottom right-hand corner of your screen, you're going to see percentages of all the big stuff. And I'm going to zoom it in just a little bit here. So you're going to see everything that's winning, right? And then you're going to see, and I'm just going to move this way down. And so you're going to see everything that's winning. It looks like opening bell. Let me fire it off.
These numbers are the real numbers, and they're amazing.
Nvidia, is it your favorite Mag 7 name?
Absolutely, not a problem. Not a problem. And the new stuff that they're coming out with in health is remarkable. I've been working on one of them, and it's just because as a beta test, just for some health stuff that I will talk about on the show. I don't have the right, it's an embargo thing, but I know that the stuff that they're bringing out now is so next level healthcare that it's really the vertical of healthcare is going to be the next thing. People aren't thinking that. They ought to be thinking about that.
I mean, that conversation, especially with the watch, never really goes away.
No.
But the degree to which they become a medical
I think
device
that's pretty
company.
good.
Yeah, and I think that if I were a Cerner, I've talked this to Tim Cook about
MSTX is going up. I'm going to have to add you to that.
These are the things that are going to define healthcare. And we know that there's like Abbott's in that game, but there's a lot of different things that are going to be in the watch. And in the, and with your.
All right, 1 second here. I do have the right one shared, so that's good. I am going to go ahead and just refresh this real quick on my other screen. So I'm going to keep an eye on CNBC, and I'm going to look and see if there's any interesting interviews to go into too. I'm actually going to open up another thing here, open in a new tab. Again, if you subscribe to CNBC, you guys don't have to because I do. So I mean, it doesn't really matter. But you can go in here and you can like see all the videos that they do, and you don't have to worry about advertising stuff and all that bullshit. I'm just going to look through here and look at some of the latest ones and see if there's anything interesting. Bradley Tusk on potential of Uber, Expedia, I don't care. UBS on Amex Q3 results. I kind of care. I want to hear how credit card companies are doing. I think we're going to listen to that. 1 sec here. And then I'll try and get caught up in chat.
This morning, the company reported mixed third quarter results. Actually, if you looked at them for the most.
Nigerian. I wonder if she's married to like John and those guys, the twins, one of the twins, the options guys on CNBC.
Part on the top line or on the bottom line, they were pretty strong. They did come in with much better than expected bottom line earnings. The revenue line was a little light. It did raise its full year earnings guidance, though, too. Joining us right now is someone who's about to.
Real quick, Rob Cass Visual says one of my favorite qualities in Jesse's is optimism and positivity. He's always saying we're going to make so much money and it's rubbing off. Here's the thing. I don't like to be irrationally. When we get higher and start to make a lot of money, I'm going to be pessimistic on a lot of the things that I'm talking about right now. That goes with the season. I am always looking towards the builders. I think you look towards builders, look towards fixers if you want to understand reality. And if you don't do that, I think you end up not knowing reality. And I want to know reality and represent reality. I'll be overly bullish when I want people to be overly bullish. It's just the way I roll. Because I believe optimism. Markets literally go up 90% of the time. So to be a bear is not a winning formula, especially over long periods of time. So, but I try to be a realist too. Anyway, let's listen.
Jump on the Amex call. That's Erica Najarian. She's UBS large cap banks and consumer finance analyst. And Erica, at first blush, when you looked at those numbers, they were pretty impressive. Why do you think the shares are down?
So American Express is not really about the bottom line. The reason American Express trades such a premium is it's really because of spend. And you may have seen that they went to the low end of their revenue guidance for the full year. They were really expecting a rebound in spend to get to the midpoint of that range. And with the valuation where it is, I think that investors are a little bit nervous that the big American shopping spree post-COVID is perhaps continuing to decelerate.
Okay, so.
All right, that's an interesting take. I'm going to listen to more of that in a second. Somebody, JT said, Jesse's got the best Tesla video probably out of anybody. I don't know if that's true, but I do think I have a good one where I was talking about my options contract. I have one called the $14 million bet. That's pretty good, but there's another one that I did later that talked about the 4 phases of Tesla's consolidation that I'm going to post to chat. For anybody that wants to see it, I think it's a good one.
In terms of consumer spend, they did say that card fees were up by 18% versus 16% last quarter. So that accelerated. But I guess you're talking about the overall growth, which was up by about 6%. What do you need to hear from the company? What are you going to be digging down on? Just whether consumers are pulling back or not?
Yeah, so underneath the hood, Becky, you actually saw some spend trends decelerate. They love to do it by age cohort. So you saw, Gen Z, millennials, Gen X decelerate their spend by 1%, baby boomers by 2 percentage points. And interestingly, T&E or travel and entertainment spend actually decelerated as well. I think what investors are going to focus on is what does this imply for 2025? I think we've underwritten this concept of a soft landing and continued strength in the consumer, but the spend trends have been stable at Amex. And so, if we think about those leading indicators starting to slow a little bit, does that mean that spend, slows down from the 6 to 7% that we saw this year? And by the way, those card fees are those annual fees, like the $695 per year that you pay in a platinum. So that's going up. And I think American Express has actually hinted that it's pursuing potentially a higher platinum fee in the near future.
Yeah, the way they describe it, at least, is they'll say,
credit card companies are dead, man. I'm sorry, but you can't be demanding higher and higher fees unless you're providing a lot more value. And the best credit card out there that I can find right now is Robinhood. Still waiting on my gold card. Vlad, Roy, you were there hanging out with him. Tanner, Amit, anybody? Can anybody get my gold card expedited? Anybody? But they're the best credit card. If you have less overhead and you're embracing technology, you're going to be able to really drastically reduce fees across these platforms. And I don't think any of these credit card companies are going to make it that long, just like I think most of legacy banking is going away.
We're charging more, but we're building more value into the card. I guess the question becomes, is there a price point where consumers will say, okay, no more, we will not continue to increase those fees? I think to this point, they've seen very strong renewals, even with those. But you're right to point out that the stock is up by about 48% year to date. So there's been a lot that's been built in and given to that in terms of the credit they give for that, too.
Absolutely. And look, if the economy is fine next year, it's no problem for folks perhaps to spend almost $1,000 per year, especially if Amex continues to increase the value that you get for the platinum card and the gold card, let's say, which is a different price point. But if the economy is a little bit softer, and by the way, bank earnings are implying that all of those COVID savings in terms of excess are now sort of closer to 2019 levels, then, there may be folks that say, hey, it's a charge card. I don't have, recurring debt. Maybe I don't need to wake up on January 1st and spend $695 or $1,000 wherever Amex decides to raise it to begin the year. So it really, really depends on whether or not we stick this so-called soft landing.
Yeah, I don't know. I think that the real problem there is Amex. I think Amex is not a great company. And again, it's one of those things where their model was always about exclusivity. If I can get a gold credit card from Robinhood, an up-and-coming company that's trendier and cooler and hipper, I'm going to go that route. I really don't see the point of American Express anymore with the high fees, with these credit card companies. They've been pushing those on merchants. Merchants are going to get tired of it, and they're gonna push these people away. So I think you guys are talking a lot in chat. You guys really took me up on that offer for looking at stocks. I've definitely got a lot more of that to do, I think. So let me just look here real quick, though. I want to see if there's anything else that's interesting in these latest videos. Pinchuk, we believe in the American worker. It's the answer. I'm interested in that. The restaurant business is a mixed bag right now. I agree. Wiz opened a London office to double down on UK market. Okay. Israeli Prime Minister Netanyahu place in history will be determined. I watched this one. It's bullshit. It's not realistic. John Moeller on Q1, sales growth, full interview with Procter & Gamble. ARM is the architecture for Apple's M series. That's kind of fascinating. All right, so a bunch of these I don't care about. I probably will. I do want to watch a couple of these videos, guys. I want to see things that I believe are really relevant to my worldview and the things that I'm invested in. I'm going to want to watch videos of. There is some good commentary on CNBC. If you just ignore all the people that are on there every day, it gets a lot better. MSTU is up almost 10%. That's awesome. Yeah, I got to add that to my watch list. Like I said, I got to build key things for this weekend. I need to update my portfolio. I need to build out the watch list. By the way, we're hitting 68,000 on Bitcoin. That will send everything launching. So I hope you guys got an opportunity to, if you guys are subscribed, you knew A, that when I got out of MSTX, and then you knew B, when I was telling people to go back in the last 24 to 36 hours. So, well, MSTU now. But again, so like with some of these, you gotta, especially with MicroStrategy, it is super volatile. So it can rise again. It can go up because the multiplier right now, what is it? It's not that bad. It's not as bad as it was. It was like 2.8. It's only 2.4. So again, you still got 0.4 off of that. Now, if it starts getting up here into the 2.75, 3 range, in between that range, then it becomes more dangerous again over the short term, unless Bitcoin's price is just screaming higher. Let's look over here too real quick on the heat map. Tesla's starting to normalize. Again, I think it's going to roll over. So I'm okay with that. It's all about technology and the big dogs today. I wonder what sectors. Let me just check something real quick. I'm just curious. I'm curious how the Russell's doing in the face of all this. Let me just see what it's up today. 0.15%. And then what is the NASDAQ doing? 0.55. And what is the S&P doing? 0.17. So the NASDAQ is leading. It's all about NVIDIA again today. That appears to be the big theme. All right, so let me just check out. Again, I think I want to listen to this other video. Let me just find it real quick. Still nothing really interesting going on CNBC otherwise. Let's listen to what Pinchuk has to say about the American worker. Some of these old dogs...
Welcome back to the show. Good morning.
Some of these old dogs are a lot smarter than people give them credit for, and I like to listen to wisdom, young and old.
All right, how's it going, Frank?
It's going pretty, not as good as you, man. Stock's trading at an all-time high. You had a strong quarter. I want to ask you, what was the driver of this quarter? Your tool segment was the best performer, but exactly what led to that boost when it came to tool sales?
You know, I think this. Look, I'd like to say charismatic leadership, but I don't think that's it. You know, I think this is it. If you're looking at, we pretty much had across the board tepid. What differentiated this quarter, we've had a lot of high quarters, you know, over the last 10 to 15 years, almost every quarter has been a relative high, you know, for the first, second, or third quarter. But this one was different in that the sales were all down slightly, you know, attenuated by the uncertainty and geopolitical turbulences and uncertainty in the U.S. market. But the difference here was across the board, profitability was up. You know, we had over 100 basis points gross margin improvements in every division, in every group, and the overall corporation was up 130 basis points. And we spent more SG&A because we believe that the future is going to get a lot better. So I think the big thing was about this quarter, I think, which got everybody's attention is profitability improvement, record profitability against the wind. And so we proved that Snap-on. We've always said that Snap-on can make more money even if we don't have scale, and this one proved it. Now, what drove it, I think, is a couple of things.
Wait, Nick, I want to get into one other metric. Let's talk about margin. Margin is actually a big story. A lot of people looking at valuations and margin nowadays with the markets. A lot of people think kind of frothy. So how were you able to expand margins? I mean, some of it was material cost according to your earnings report. But what's this higher margin business? What is this higher margin business that you were able to capture?
There's two things going on. If you want to look at it in a macro sense, you know, people look at us as a tool company, and you said hand tools. Hand tools are really profitable. We make the best, and everybody knows it. But the other thing about vehicle repair today is software is becoming more and more important. Software for running the garages efficiently, software for finding the right part efficiently, electronic parts catalogs, and most of all, software for helping diagnose and repair the business. You see, the thing is how it is now is there's so many electronic trouble codes on a car now. You can read those codes, but it's not definitive. So then the standard way to diagnose the car is to go through a decision tree. It takes a lot of time. Well, we have databases that are, some of them are almost 3 billion repair records, and some of them over 400 billion data points in repair. And so what you do is say, here's what the car is saying, here's the type of car it is, here's how much mileage it is, and you put it in our database, and it'll give you a Pareto diagram saying it's most likely this, and that business was up, one. And then two is, we're a business that calls on mechanics and calls on customers in critical industries up close and personal, and we see what the work is, and we translate that in into particular products that solve small problems, and people are willing to pay for those. And so we introduced quite a few of those. That drove the margin.
All right, so Nick, one thing, you mentioned all the mechanics and different technicians that you check on. You previously told.
All right, so that's interesting to a degree. I'm happy that the tool sector and auto workers are doing so well. Bitcoin is breaking out. We're at 68,200. If we hit a new, I don't know if I can call it a 52-week high because it just hasn't been that long. But if we hit a new, several month high, we'll know it because we'll hear an alert going off. And it shouldn't be deafening though. It shouldn't be deafening. Kelly, oh, what's up, buddy? How you doing? Love you, girl. Self-made mastery, is that your ex? Let's look up Kelly. Kelly's over there somewhere. Let's find Kelly. Kelly. Yeah, there. Kelly. We love Kelly. Palantir solves this. Which part? What does Palantir solve? Sorry. Which thing? Which thing are we talking about? There's Kelly. We like Kelly. Kelly's cool shit. Top picture is harmonic series. The bottom picture is an X-ray of the inner structure of a Yeah, there's so many cool things that come in with math, and like Fibonacci and all that kind of stuff. It's very cool. Very, very cool. Anyway, it's probably weird having somebody pull you up when you're in chat. So I'll probably stop now. All right. All right. Do we still think miners are about 2.5? I think miners. No, I think miners can be 2.5 to 4x. They were as high as 6x. The underlying. They can get stupid. It just all depends on how stupid they want to be. All right, let's keep going here. So I don't know if there's much else in the way of video. I'm gonna get caught up on chat. I'm just not super impressed with some of the content. If I find other good videos, I'll bring them up in the market recap at 3 p.m. guys. And if you guys have any other news-related events, throw it out. I'm just gonna roll through chat. Again, bottom right, you can see what's going on with all the stuff on my watch list and what's kind of rocking and rolling. BTC dominance seems to be climbing. I might have to check that in a second. You can also see Bitcoin's price, and then again on the main screen we've got the stock heat map index. It's a little bit behind and delayed, but just a couple of minutes. Anyway, I'm just gonna keep rocking and rolling, going through chat. Rob cast visuals. I enjoy it when he gets all amped up. Who, me? Yeah, I do get amped up. Theo, Lucas, $30 to $32 is where Jesse will begin to scale out. Oh, I love it. I love that you guys pass on information so I don't have to repeat myself. You're awesome. Book and trades. Yeah, imagine if the government actually backs Tesla as opposed to the current regime supporting all EVs but Tesla. Yeah, you're doing it, Mary. You're doing it. You're leading the EV industry when he isn't taking a nap. That's funny. General Motors, that's what they're talking about on CNBC right now. Heinz in. I also think Palantir does well no matter who wins the election. I agree with that. I think Karp has done a good job playing the middle of the road. He's kind of a weird combination of liberal and conservative, but like in the right ways. So I agree. I love Palantir. I don't know if I love it as a short-term stock holding, and I haven't actually looked in a while. How's it doing today? Again, just kind of, it seems like it's still toppy. I've kind of said this before. I think we're doing a tweezer top up here. It hit perfectly where I was saying that it was going to hit resistance from the previous all-time high. I think it just trends sideways for months, maybe quarters. Anyway, back over here. Let me see here. Have you had a chance to look at some new Tesla calls? I have, and I'm just not interested in them, Tezos. I like my current setup with, what is it, June of 2023. I've got like $1 million in it or something. maybe a little less. I think it's close to 1 million. Seymour Sats, best miner to buy today for short-term trade. Got a bag of CLSK. Looking for, if you want something small, Bitfarms is underperforming, and I like it. I also like Mara as a larger cap, and then Iron is that HPC play. Those are really my takes right now. All right, so MB says, how much of Trump's election do we have already priced in? I don't think, I think a little bit, but honestly, I don't know. It's going to be tough. I think we have a ways to go. I think we can go up a decent tick, man. Trump is pro-growth. He's pro-Bitcoin. He's pro-ending the war and all the spending we're doing with Russia and Ukraine. He's a lot of things that can drive growth. So I don't think we're there yet. I think we're a ways away. Lucas, Theo, and then even if it's priced in, time fundamentally will change it more to the upside. And then you have global liquidity and everything with the Bitcoin cycle, the election cycle, monetary stimulus. We've already had plenty of fiscal. I'm sorry, vice versa. Yan C, Riot has a bigger bag of BTC. Bigger than what? CleanSpark? For now. For like a quarter. For a couple of quarters, maybe. Brandon Shep, no comparison between those two miners. And I also don't like Riot because they have a lot of agreements to turn off their hash rate, and that is super cool during a bear market where you can get energy credits for turning off your hash rate. But if you're making a large profit on your Bitcoin mining and you have to do it during a bull market, it sucks. So it's like a counter to the good stuff that you get in the bear market. Theo, starting to look more into Riot. Could be a sleeper. Yan C, Riot has a good hash rate, but somehow they're not. CleanSpark's better. Mario says, Jesse, can you share your thoughts when to get out of invested in miners? No option, stock only is the main indicator, the BTC. There's so many different indicators. I went through a couple of them. There's stuff in glass nodes. There's probably, I can think of like off the top of my head, like 15 indicators that tell you when Bitcoin's getting ready to top. Miners will happen before that. I will be telling you when I'm getting out, and then you can figure out what you want to do at that point. But I am the opposite. When we're doing really good, guys, people, just like how people yell at me and call me an idiot for buying on the lows, they're going to call me an idiot for selling when I think we're getting too high. Because I've said this before, but if you're up 1,000% on something and you're like, oh my God, I could get to 2,000% if it doubles. Is it worth the risk of the 1,000% you had in gains for an extra doubling, an extra 100%? Or would it make more sense to be out of those profits and then looking towards things that aren't overbought and that will be performing in the future? Is that a better like hedging or risk management strategy? I think it is. So I dial out of things and I don't give a shit about the last 100%. If I'm all dialed out of Bitcoin at 150, I probably won't be. But if I'm all dialed out, I'll be dialed out of all the leverage plays, probably all the Bitcoin miners, all the altcoins. But if I'm dialed out at then and then they double and it goes to 300,000 and maybe I could have missed a doubling or another 200%, I'll be okay with that. I'll still have my Bitcoin stack, my hardware wallet stuff, and I'll be okay with it. Because I move on to other things. I don't try and eke out every bit of profit. People that try and do that lose all the time. Book and tackles. I'm already heavy CleanSpark. Nunya Biz says, will Riot acquire Bitfarms? I don't know, maybe. I don't have options in Bitfarms because it's so small. I'm worried about a Matterport. I doubled my money on Matterport, but I had options that were too far out in the strike, and they didn't hold any value right away when the buyout was announced, but people were too stupid to realize that. So I was able to exit with 2x, but I didn't exit until I let you guys fucking know. And I said, I'm getting the fuck out. And then I showed you that I got out. So just remember, I don't try and front run people. I will, a lot of the times I'll do the majority of my trades before you, but I warn people all the time. I'm not a pump and dumper kind of guy. I'm a long-term holder kind of guy. But yeah, I don't want another Matterport. So where the people that followed me made a lot more than me because they didn't have strikes that were so aggressive on their options contracts. So I don't want another one of those. So I just told Bitfarms straight up. Theo, HPC may become commoditized sooner than we think, dropping down the margins quickly. Yeah, that could happen. That's why I only have like 6 figures in Iron. Michael Quinn, catching up on the stream. Thank you, Jesse. You're welcome. Theo, Riot and Bitfarms agreed to back off any merger acquisition until 2026 of the table off. Yeah, that's good at least. At least there's not that aggressive trying to purchase Bitfarms thing. Albert, CLSK is now 30 exahash. That is awesome. That is awesome. They're talking about being 35 by like the end of this year, right? Book and Tackles, thanks for the breakdown. You're welcome. Arcadian, Bitfarms' former co-founder was removed from the board, has been selling around 2.5 million shares in the last week. That's why the price. Oh, thank you for that. So insider sales. Do we know how much he has to sell left, Arcadian? Mop74 says, thanks for the info on miners. Heinz, rollover means the stock price goes down. Yes, sorry. When I say rollover, if I'm talking about like if it looks like it's going up and I say rollover, it means I'm talking about it going down. MB, Heinz, and yes. Trey Gotti, CleanSpark is already at 30. Trey Gotti, they notified shareholders a few days ago. It's now at 30. That's awesome. SK, would you buy Uber calls to hedge against Tesla? No, Uber's a shit company. I'm glad that they got to some form of profitability, but I don't buy companies that are going to die and literally be destroyed by the investment that I currently have. And I don't care about hedging. I would rather have a little bit of cash and buy the dip. Xian Ho, thank you. You're welcome. Chris Federal, Tesla, in my opinion, old Republican money is waking up to Elon that he is not Looney Tune character. I don't think any drop from here will be much. I agree. If we get an 8% drop, I'll be stoked, especially if Bitcoin's screaming higher. And Bitcoin is so wanting to break out. If we close where we are right now, guys, we would be in breakout territory. The first time that we'd broken out of this descending line, if I go all the way over here, this descending line goes back a ways. Let's just look at it. Look at it. And this is on, and when I say that, I should clarify. If we close where we are now on the weekly time frame, or I'm sorry, even just the daily time frame, let me go to that. Oh, where'd I go? All right, there we go. On the daily time frame, we would be higher. We would be breaking out of a downward trend that started on March 24th. That's a big deal. So if we close where we are just today with Bitcoin by 7 p.m. tonight, I think it's 7 close time, right? Central time. If we did that, we're in breakout turf. So this is a big deal. Riot can keep their miners plugged in. They're most inefficient out there. Most inefficient. Yeah, right. Theo, the best Solana play in the market is Sol Strategies. Is it really? 3x premium to NAV sucks, dude. That's shit. Anybody betting on a 6 to 10x NAV of something is insanity to me. I'm sorry, Theo, but what you're literally saying is Sol is great because it'll go 10x what they actually hold in Solana. That is not rational to me and nothing I would ever look at. Tesla, I think, rolls over. I think it drops 8%. So you're right, Heinz. But yeah, I would never, that Sol Strategies thing, if it's a 3x premium to NAV, I don't want it and I don't care. If it really gets crushed, if the NAV gets crushed, let me know. Mauricio Montoya, what does it mean when you say Tesla will roll over? I mean the stock price. Sorry, guys. Ali Shahabi, trade is suspended in the UK. What was the reason? Do we know? Chris Federal, by the way, just listening, great advice on the psychology of investing to have to buy the dip. It's so much better that way. Ali Shahibi, on trading 212 at least. Theo, Brandon, is that is their one weakness. During high energy requirements, they got paid to shut off miners. Yeah, and that sucks. It sucks during the bull market. $5 from BGZ. Do you think Bitcoin will still drop 75% in a bear? No, it'll probably be in the 60s. No, I don't. Every cycle, it drops less. I don't have the exact number sitting in front of me. I could maybe find that, but from peak to trough, it's less. Last time was in the 70%. When I originally got in, it was almost 90%. And it just gets better every cycle. And I expect this next one to only be like a 60% drop. I actually did show some of that too. If we top out around where I think, you know what? That's actually pretty fascinating. Let's talk about that. That's actually pretty fascinating. So that's a good one to talk about. Let me see if I can find my Bitcoins. Where my Bitcoins at? Let's get another one. That's actually a really cool topic that I want to talk about since you brought it up. Let me just do this. I'll take this out. I'll go to the monthly, and then I'll go here. Oh, you know what? I will need this though, because I got my little bars. Got my little bars over here. Gotta have bars. Let me fix this. Oh, I hate that connect issue. And I've tried clearing cache and stuff. It does not help. It's just like it sees residue, like maybe my phone has TradingView open or something, and it gets stupid. So let's say that Bitcoin goes to where I think it can go, 280,000, right? And that it does that by July of next year. It doesn't have to be July. It could be a little bit later. It could be like I do believe it's this next fib, but maybe it's over here in October. That's traditionally where it's at. But again, in this line here, guys, you can see the channel that I'm talking about. It's pretty consistent, right? It's been a very good channel for the support. It's been the channel is resistance twice, so that's less consistent. But again, pretty good. It's a pretty clean looking channel. So let's say that we go all the way up to 280,000. What would the drop be for it to go back and test support on just this wicked amount of price action that we have over in this range? So if we go back to just the 72, 73 range, like right over here, kind of where we topped, that's a 74% drop. So that's steep. So again, maybe, I don't know, maybe the 180,000 range is more likely. Or again, maybe we just don't go that far, or we go really high and we get 74. Let's see what was the last cycle, peak to trough. Let's see, what did we do here? I got to look at some of the, it's been a while, right? It's been a while. So the last one was 76 or 76, 77. So that was pretty deep. So maybe it is in the 70s. So if it did this, if it was 185 and it got down to where we really start to have volume, that would be a 65% drop. So I think we at least get to 180,000. But if it got all the way up to my 280 target, that would be a 76% drop. That would be the same as the previous, or it would have to top out like barely in this peak volume at 73. I don't know. 280 seems like a stretch to me. Maybe it stops at 200. Let's just say 200. 200 is like a 64. That's probably too much or not enough. Maybe it's something like this, the 200,000s. So maybe it doesn't get all the way to where I want it to get. But if it did that, it would be a 68% drop, which would be a significant reduction. And then let's look at the previous one. What was that one? So back over here, we went from here. So yeah, you see that drop? So again, 80 something there. So you can kind of see the difference, right? 84% drop on this one. Let's just get this right. Yeah. 84% drop on this one. 76% drop here. 68% here. Seems feasible, right? So I think the 200,000s are feasible. Anyway, that's my 2 cents. So maybe not the full 280. I think too many people will be looking for the 280. And that won't treat them well. When you get too many people on board. Bitcoin is still taking off, guys. What are we at right now? Jeez. Bitcoin is at 68.2. I love that. Let me resort this and see. So MSTX or MSTU, guys, you'd be rocking it today. CleanSpark up almost 7%. MicroStrategy up, again, 6.6. Iron up 5. Riot up 4.84. Bitfarms is just getting crushed. Again, maybe it's that former CEO or whatever just dumping his shares. But I hope he keeps doing it, and then we can use that as an entry point. That would be amazing, wouldn't it? That would be so cool if Bitfarms is way behind, and then we can stack more after we make a bunch of money off this other stuff. Maybe I need to look at my account real quick. And I know I was going to look at stocks, guys, but I have a lot of stuff. I've got to go to a chiropractor today to help my back. I've got to go on a hike because I'm trying to focus on my health. So the market recap, I'm going to go long today. It sucks because it's Friday, but I'm going to skip probably a lot of news on the market recap, and I'll try and do at least an hour of looking up stocks for you guys. So if you guys want the good stuff, come back for that. Hopefully that answered your question, BGZ. And I'll try and keep rolling through here, but let me just see. I'm going to pull up my account super fast. So today might be a little bit shorter for the market open, guys. I'm going to keep going for a little bit here though and roll through some more. And if you guys have any new news events, pop it in there. I'm trying to look at where I was in chat, where I left off, and then also what current chat is. I'm getting a little bit better at that. And then also the news that's going on CNBC, and they're talking about China. That's kind of interesting. So let's look at CleanSpark here. So the data hasn't updated. It's only 9, so I don't know if I'm getting all the good data in my portfolio right now. So I'll show that later. It looks like it's a little behind. But if it's right here, then I'm up another 35,000. Yeah, my calls. Yeah, so let's just look at that. So my calls, at least on CleanSpark, are looking really good. Up 40% now. I've got $300,000 in CleanSpark, and up 13% on the day on a 7% move. I don't hate that. I would be doing better with MSTX today if I owned it. I don't. I do have a more MicroStrategy though. I've got like $60,000 or $70,000 worth, so I'm not completely out. But congrats to the people that are writing that trade again and that listened. Tesla down today. Don't care. PayPal, it looks like it's kind of flat. Micron's kind of flat. Iron is up. Good. Yeah, this is great. So again, Bitcoin is really kind of leading the charge in my account right now today. I love that. Looks like RG's doing all right too. 4% on an options contract with a 0.72% move. There's a decent multiplier on that contract. Anyway, yeah, so not too bad. Let me go back over here. I'm going to check real quick. I actually might want to listen to CNBC for a second. Yeah, I do want to listen to this. Let me go back real quick, though. I want to see what they're talking about with China. See if it's bullshit or not. It's probably bullshit. I'm going to turn this on. I'm going to switch to full screen. I've got to use the bathroom here, too. But I'm going to mute here so I can listen to it while I'm going to the bathroom in the other room. 1 second. Give this 1 second, and it'll start playing.
Good Friday morning, and welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla. We are live for you, as always, from Post 9 of the New York Stock Exchange. David's on assignment. Take a look at stocks. We've got the S&P up 0.2%. Communication services, best performing sector. Netflix is surging. It's up 9.7%. But also the media names. Paramount's up, Meta, Alphabet, Match, News Corp. You've got the S&P now tracking for a 6th week in a row of gains, up more than 0.6% now week to date. NASDAQ up almost a full percent, and it is leading right now. The Dow is a little bit weaker. Energy, financials, consumer staples, and industrials are your weaker sectors right now, weighing on the Dow. We're 30 minutes here into the trading session. Here are some movers we're watching. C-suite changes at CVS Health this morning. The company naming longtime executive David Joyner as its new CEO effective immediately, issuing disappointing earnings guidance as well. More on CVS and what's going on there ahead on the show. Procter & Gamble shares are lower. Earnings beat estimates, but weaker demand in China hurt overall sales. And then American Express is falling after mixed results. We're stock right now in the Dow. Revenue coming in just shy of estimates, but total card member spending did increase 6% in the quarter. The company also raised.
All right, real quick. Sorry, I'm interrupting for a second because Bitcoin is at 68,300. We're getting ready to beep higher. Oh, exciting.
Guidance. And then keeping an eye on Apple, too. Some fresh headlines here on China iPhone sales. We're going to break down for you later this hour. But Apple is up a little more than 1.5%. It's really Apple, Netflix, and NVIDIA, as well as a little bit of Meta powering the NASDAQ right now. We got some China news overnight. Just wanted to hit, Carl, because we've been so obsessed with China lately. Is it or is it not recovering? Will it or will it not hit the 5% growth target? So, mixed bag.
Lol. There's no way. They could be negative GDP right now. We don't even know, okay? There's no way they're hitting a 5% target.
China third quarter GDP, 4.6%. That was on the weaker side of things. But retail sales were okay. For September, they grew 3.2%, and that was a step up from the 2.1% or so that we had in the month of August. That's some signs that the subsidies that the Chinese authorities have been giving for things like auto sales for trade-ins have been working. We saw that in the number. And then industrial production up 5.4%. It was enough to get a rally out of China. It also came at the same time where we got more measures out of China. Every day there's measures to boost capital markets. So this one was focused on the stock market in particular. And the People's Bank of China, the central bank, their governor, said that the two main challenges that need policy support are the stock market and the real estate market.
Hold up. We just did it. We're at 68,443. So this is the highest level we've been, guys. Let me see here. Highest level we've been since, what date is this? Sorry, there's so many alerts going off. Highest level we've been since July of 2024. So this is good, guys. We're seeing some moves here. We're seeing some moves. This is a good break. I'm not going to turn it. Every time I turn this thing from red to green prematurely before the close, it always ends up going the other way. So I'm not going to fucking do it. I'm not ringing the cowbell early. I'm not pulling an emit. Okay? We're going to keep it red. We got resistance up in here. I am going to move this line, though. I'm going to move this down to here just so that the alert is in the right place now. But, oh, this is exciting, guys. Ooh. Who's ready to get stupid rich? And if you're already stupid rich, who's ready to get stupid richer?
And there's more evidence that they're doing stuff to try to boost that. Is it just going to paper over some of the bigger structural problems and be sort of a short-term Band-Aid? We'll see about that. That's what the market's trying to figure out.
JP Morgan, no doubt today, China's slowdown no longer has a material impact on U.S. growth, as the U.S. is less reliant on China for trade, while U.S. business...
If only somebody could have told us that the U.S. wasn't reliant on China growth and that their demise could actually end up being something that benefits us greatly. If only somebody had the foresight to be able to come up with that.
Businesses continue to reassess investment in China. They say it's the rest of the world that's more reliant on China right
Congrats,
now.
Dustin.
And we've seen that in our resilience in our economy. I mean, they haven't really even exported the deflation that they've been having and the weakening growth. We don't have a huge trading relationship with China and a huge interconnected economy, although it's enough that decoupling would be disastrous. By the way, on China...
Would it, though? I mean, it's been happening for years. It's been happening since Trump's presidency. Again, it's happening. Would it be disastrous if it's happening and it's not hurting us and actually benefiting us already?
The IMF managing director kicks off the World Bank IMF meetings next week, and she did make a point in an interview of talking about China and lecturing of what they need to do. She said China's at the fork in the road. If they continue with their current model, which is export-led growth, then it would be in trouble. Why? Because the Chinese economy has grown to a point where China's exports are no more a minor factor in global trade. She says they need to stimulate the consumer part of their economy.
No shit. How do you do that when home prices are plummeting?
Echoing what we've heard.
And 60% of people's wealth is in homes. And they're down 50% on their home value. Can you imagine that? Can you imagine having a loan on your house and having no real bankruptcy system, like not a good bankruptcy system in China at all? They literally didn't even have one. And even now it's pathetic. And your 50% value on the loan that you're paying on your house, you can't sell it. Nobody wants it. There's already way too many, 100 million plus homes that exist that aren't needed. I know that's a crazy figure, but it's true. So how does life get better? You're literally a debt slave. Way worse than here. At least here in the United States, people have money. They have equity. Most people that have home loans, they don't even have mortgages, guys. There's like, what is it, 40, 50%? It's like 40% of people that just own their homes like free and clear. So you got to realize the boomers, they own their homes now. And again, we just don't have all these risks. We don't have all these risks. Our housing sector is just so much better.
Heard before from other major economists like Treasury Secretary Janet Yellen. Will they do so? That remains one of the bigger questions that investors have. So you're right. It's a market story now more than an economic.
It's a fucking trash story.
Spillover story, at least to the United States, but globally, much more so in places like Germany.
Right. And sort of explains Europe's weakness to a large degree. Yeah.
Right, because there's more of a relationship there. The European luxury companies like LVMH, so tied to the China story. They had a weak quarter this week, and it was tied to China.
So you're telling me tied to China and people aren't buying Louis Vuitton. So when the rich stop buying, you know it's time to get worried. Because the poor, they haven't been able to do that for a long time. And then the only thing they're really buying are Teslas. Isn't that great?
In the U.S., I mean, to your point, things just continue to look really good. In the here's why we're not in recession story today, investment grade bond spreads. I mean, have you seen these spreads are at the lowest level since 2005, which is this is the difference between the yields of investment grade or blue chip bond yields and treasuries. And what does it speak to? A lot of demand for these companies, whether people are locking in higher yields before the Fed cuts rates or just the benign economic.
Oh, yeah. Pete has a really good point, too. And I do remember that. He says, remember that they start paying the loans while the construction didn't even start and was dropped way. So you got to realize these people, there's tons of people that have unfinished buildings where they've been paying on loans for a half a decade or more. And they don't have a property and it's just concrete. And in some cases you can like stick it or poke a stick at it and the concrete will break apart. And it's like a 30-story building. So you can imagine the dismay of these people that are just utterly screwed. They're utterly screwed because of all the corruption of the CCP. Because people have learned over the years, like, I'm getting rich, I'm getting richer, I'm getting richer. Use the system, use the corruption. 15% of this country is corrupt to the core. So just use that system to benefit myself. And they've all done that, which is why there's this anti-corruption campaign, which was really also just a go after my enemies campaign because everybody in the CCP is corrupt. And if you're all corrupt because that's the way the system works, then you can literally get rid of your enemies because they're all a part of that system. But think about how horrible this is. The Chinese people, I don't know. If you're religious, pray for them, okay? Because I think they're going to have probably one of the worst times of any current civilization on this planet sitting in front of them. And we should have pity on these people because there's a lot of them that are just a part of the machine and they don't want to be. They tasted freedom and then they had it pulled away. So take pity on them. Don't put your money in the country, though, because we need the CCP to fall.
Economic environment and better earnings.
And if that doesn't scream that I'm biased against China, I don't know what does. I'm biased against China. I could put it in big letters if you guys understand it better.
Environment make these companies a safer bet. All of that shows that the credit market is really sort of underpinning what we're seeing in this environment, which is things are looking good and strong.
Kind of points to our conversation yesterday with Canyon Partners.
Real quick, Nerd Shack said, what is a good price target for ARGT? That's the Argentinian fund that I was talking about in my members only video recently here for YouTube. I actually think ARGT, like a good price entry is right now. I think this country is amazing. We're going to get additional Argentinian economic data today. Tonight or this afternoon at 2 p.m. I'll talk about it in the market recap. We're going to see balance of trade in the leading economic indicator, leading indicator, whatever. We're going to be seeing that too. I don't know if that's going to be too telling in regard to the story of Argentina. There's probably more data that's more interesting to me. But I think right now, I think Argentina is a great stock. I'm very excited about it. And I'm going to be adding to it. Like, again, that's one of the things that I'm probably going to be going into more as I make a bunch of money off of Bitcoin, as I make a bunch of money off of PayPal, as I make a bunch of money off of Tesla. I will be dialing in to things like the Argentinian fund. And I don't know today where it's at. Like, hopefully it keeps dropping, right? Because I want to be able to buy it on the cheap. But let's just pull it up here. Looks like it's up 0.35%. But I think right now, and I made a video, guys. Again, it talks about all of this. It talks about how much smaller this economy is right now, and even based on population size, how much it can grow. You got to realize 100 years ago, there were articles being written talking about how Argentina was going to be greater than America. They have massive amounts of natural resource. They've got a bread belt in their area. They're like the polar opposite version of the United States. They have a really great plot of land to live on, and then they've got a lot of history, and it was a beautiful civilization back in 1920 or something, long ass time ago, 100 years ago. It was beautiful. It was an up and coming country. It was like one of the richest on earth, if not the richest at a particular point in time. And so I think Argentina, just like is represented here, is getting ready to break out of the .618 retracement zone, and I think it's getting ready to go a lot higher. I probably need to redraw this. What I should probably do, let me actually do this here, just to get a more updated version of the trend-based fib extension. What I need to do is go over here to where this bottom was, and then I need to draw it to this recent top, and then I need to draw it back down to the bottom that I think was recently established here. And so what I should do is bring it back over here. Let me just get this good here. So again, this bottom right down here, top looks good. Top is right here. It's this next high after this major low. So when we do this, it's pretty simple. I mean, it's kind of simple. You go from a major low. This is definitely a major low, August of 2024. This is a huge drop. They were at 66. They dropped down to 50. And then we go back up to the high, and then we go back to what I believe the low to be. And I believe the low to be right here. And then we save that bugger. And so now what I believe the measured move to be is like at least up here to the 80 range, if not higher. And again, it's one of those things where this could slowly go up, but I think Argentina's story is going to get better and better and better every year that goes by, and I'll be monitoring that all the time. Theo just added to Argentina. Cam Prague says, whoa, Sarah Elson has net worth of $7 million. Who is Sarah Elson? Sorry. Jeff L. They say Buenos Aires is the new Paris of South America. Yeah. Cam Prague, BBAR, Banco is an Argentinian, is up 180% in 1 year. I believe it. There's a lot. If you just look at this Argentinian fund, it's done so well. It is the best performing country-related ETF in the world. So it crushed 2023 and 2024. If you look over here, I mean, look at this. In 2023, this thing was $37, and so it's doubled. And if you go back to, let's see, 2022, this thing was $23. And so it's went up 3.5x since 2022 and it's got a dividend. So for a world fund, or a country-based fund, for a country-based fund, this is a great opportunity. And I think it can just grow exponentially. It's actually, because it's like small caps, it's a much smaller cap. And even when you factor in population differences between India and this country, it's still just a really small cap and smaller than India. And so it gives you a higher multiple to the upside. Yeah, their corporate so they'll just have to fix it, right? It's one of many things that Malay has to fix. They need to lower their corporate tax rate. You're right. All those things need to be fixed. I mean, hacking apart like 80% of the government is a good start. But there's a bunch of stuff. You need to be pro-growth, and high corporate taxes don't help. You're right, Derek and Megan. Cam Prague, Sarah Elson, financial news anchor for CNBC. We were listening. Oh, Sarah? She's worth $7 million? Hey, not bad, man. I would hope you're worth a lot of money if you literally are a news anchor at CNBC, because I would hope that you would understand a few fundamentals about investing. All right, guys, I hate to do this. Bitcoin's looking good. Markets are looking great. I think we're going to make a lot of money. I think this weekend is going to be crazy, at least heading into Monday. I'm very excited about all of it. And if Trump's odds keep improving, which it seems like the more, Ionic. Yeah, I can look here. I'll look at Ionic for 2 seconds, and I'm going to shit on it. So you're not going to like what I have to say. I'll do this real quick, and then I'll be gone. But yeah, ignore the FUD against Tesla. Here's what I don't like about Ionic. I love revenue growth. First off, bond duration is a risk because a lot of their positioning is in bonds. I wonder what duration they are. They aren't heavy on debt. Their operating expenses have started to come down for a couple of quarters. Their cash flow is at the worst level it's ever been. And free cash flow was negative $35 million on $11 million in revenue. So they managed to burn more than 3 times as much as what they made. There's Ionic. It's fucking trash. If you guys can tell me why it's not trash, I would love to hear it. But Drug and Ionic are garbage. If you like trading garbage, have fun. I think it's a great way to lose money. And again, I'll do a lot more stock stuff. I'm going to try and do at least an hour of stock-related requests, guys, in the market recap at 3 p.m. today. And if I don't get to enough then and there's enough demand, I will do something like Saturday. Or again, I usually do a stream Sunday afternoon. I will make that a whole bunch about what's happening with or make that stock requests. So we'll figure it out. We'll get caught up eventually. A lot of stuff happening this weekend, guys. A lot to do in the Discord. And I'll get my portfolio allocation updated And then I've got a lot of charts to add in there, and I need to start making my sector list too. So I'm going to be doing a bunch of stuff. But I love you guys. I will see you later. Let's give you some tunes to listen to. Let's you know what? Bitcoin is amazing right now. And so let's watch a video that I love from Tip NZ called Reality. And it tells you why Bitcoin is going to transform the world and make it something beautiful. And I think it's very important to realize the beauty behind Bitcoin, not just the money that you're making. Because if you understand the beauty and how it can transform this world for the better, you're much more likely to be resilient and hold it. So again, let's listen to the beauty. I love you guys. Take it easy. See you at 3 p.m. Central Time. Bye.
With time, a seed becomes a tree, sheltering us. With time, a skill becomes a talent, empowering us. With time, a technology becomes a tool, enhancing us. By nature, time gives value to almost everything, yet the very thing our society gives value to, our money, loses value over time. This paradox warps our reality by defying the laws of nature, and it stems from the belief that $1 today is worth more than $1 tomorrow, meaning money must always lose value. We built our reality off of this model. Time value of money, we call it, but in reality, this is just dogma. Since we can keep making more of it, we end up destroying our own purchasing power. So we put it in stocks, put it in bonds, put it in land, put it in funds, put it in crypto, put it in gold. But we are not oracles, so what do we know? We know that it's hard to get by. We know some people may never retire. Is time value of money a license that discounts the monetary value of our time? If time is money, how are they moving in different directions? We're working longer for less, we end up just giving away our freedom. Give up liberty for policies, give up our agency to the authorities, because when our foundation is built on complexity, we simplify humans by giving up our humanity. Reality check, we've strayed too far from the truth. The world economy's a wreck when 1 + 1 no longer equals to 2. And if life's created from the truth, along the way something got screwed, and we let our own dogma subjectify value. We divorce action from consequence. We defy the law of physics when we make scarcity infinite. We disregard the language of mathematics. So our systems are built on a fallacy. Our society's based on a fantasy. In the absence of truth, we're living in the shadows of our own reality. And that's the root problem. Man-made rules can be broken. As our trust crumbles, so does the progress of our civilization. But one thing remains constant. No one can cheat nature. So why not use it to architect a stronger base layer? The most beautiful buildings engineered based on these consequences. Natural law drives rigor needed to build something enduring, uncompromising on principles that accounts for the flaws. Because when our lives are at stake, the gravity of truth cannot be ignored. So if our monetary systems were designed like structures, it would embody energy and matter, so the money itself matters. An unbreakable limit enforced by costliness of creation ensures the structure holds value for many generations. A rule-based system governed by maths builds a transparent ecosystem that can self-error correct. With no one in charge, no words are taken as fact. Only work from computation can actualize truth of timestamps, and like water flowing off a cliff down the path of gravity, computational energy makes time flow one way only. It is this irreversibility which gives value to our money by upholding consensus and scarcity to create one shared reality. Now the map is the territory. Now we're working with high fidelity. Now money is truthfully time and energy bound by finality. Now we have the ability to manifest each of our dreams and build a world that is much more reflective of all of our needs. And that's the purpose of money. Merely a tool to shape our reality, merely a function to harness and express individuality, just a way to live freely, just a means for possibility. Because when we build on integrity, we enhance the beauty of humanity. The most beautiful societies are built from diversity of our thoughts that come to life when we're empowered individually. Because when our money tomorrow is worth more than today, we shift from predicting to creating the future ourselves. And when our money grows in value, we grow thoughtful in how we use it. Natural law drives rigor needed to fund something enduring, something truly worth it, something that pushes the sky's limit. Something only possible now real value and consequence exists in boundless virtual dimensions. Imagine potential creations, fueled by monetary life force, lasting for many generations. We will venture into new territories and unleash these possibilities once we learn to embrace the truth of our reality.